Hi, everybody. My name is Nir Kuris, and welcome to the FinTech Nations Hackathon and Summit. We are very, very happy to welcome all of you here with fintechs, banks, neobanks, payment providers, financial services from all over the world. It's amazing. That was our vision into bridging all the fintech nations and the fintech players from all over the world into one platform. We started last year, but this year we have an amazing, amazing summit for 14 days. So it starts today on March 1st. You'll be able to enjoy over 100 speakers we had so far. But on top of that, we have amazing networking and collaborations here on the platform. So the main idea is that you will use it to basically connect and get on a one-on-one video meeting with other fintechs, banks, neobanks, financial players from all over the world. So I encourage you to take use of the platform. It will be opening basically for 14 days, which is a lot of time. And on March 12th, we're going to have the opening live ceremony of the hackathon that we promised. We are so happy to have teams from all over the world who already started working on their fintech ideas. The hackathon submission date is March 12th. That's when the submission will be closed. And the finals are going to be March 14th. So enjoy the summit and enjoy the hackathon. For those of you who are submitting ideas on DevPost, you might win a big prize by Microsoft for Startups, our partners. I would like to really say thank you to all our partners, to High House, to Pioneer, to Invest Hong Kong, to Microsoft for Startups, to Israel's MFA, and so many others here on the platform that really allow us to have these summits and bigger and bigger every time. So take use of the FinTech Nations Hackathon and Summit. And one little thing that I want to tell you guys is that in September, we're planning the FinTech Nations Matchathon, which is our big summit. But also, we plan to start talking and discussing new ideas of cryptocurrencies, wallets, and of course, Bitcoin and other coins on our Coin Nations Summit. So all of you who are here will get a free invitation for the September Summit, which will be amazing. I can't wait to share more details with you, but basically we have more speakers, more players joining from all over the world. And again, new topics like digital currencies, etc. So enjoy the summit and see you soon. And good luck to everybody, to all our partners, our players, and the hackathon participants. Thank you. Hi, everybody. My name is Nir Kuris, and here's a short video of how to enjoy the summit that we have. So basically, when you log into the website, you see the main two buttons. One of them is called Hackathon, for those of you who want to submit an application for the FinTech Hackathon that we have, which is amazing, and the submission closes on Friday, March 12th. And those of you who want to attend the summit, the content, the video, and the networking, press the summit, join summit. So when you click join summit, and obviously after you join the Umbrella platform, basically you can allow others to connect with you, and you see who are you being matched to based on your preferences. So based on your preferences, you'll see who are your matches. The newest one, of course, you can also bookmark those who you want to save for later. And you can suggest a meeting, like a one-on-one video meeting with all the participants. And that's the main core of the platform and the main point of our FinTech Nation summits. So it's all about connecting with other FinTech fellows from all over the world. But of course, you can also enjoy, of course, the schedule, which we are loading with 100 of our best speakers from the previous summits. You can basically click and then enjoy the talk or enjoy the mainstream tab. All of them are going to be streamed here. Again, the best fintechs, banks, neobanks, payment providers, financial services from all over the world, from the best fintech nations. This time, we also have a new tool, which is the breakout rooms over here. And this is mainly for the hackathon and live tables that we're going to have. Again, all this is starting on March 1st until March 14th. The hackathon part starts on March 12th, which is Friday, until March 14th, which is Sunday. On March 12th, you're going to see on our stream tab over here the live opening ceremony of the hackathon with all the fintechs from all over the world, amazing new content over here. So stay tuned. On March 12th, we're going to have here an amazing live stream with the opening ceremony of the hackathon. And of course, on Sunday, the 14th, we're going to have the closing ceremony over here with the winning teams. And again, the fintechs from all over the world. So this is our FinTech Summit and Hackathon for this year. I definitely encourage you to take use of the amazing platform over here to enjoy the talks, the streams, but also the main point, which is the matchmaking part. Enjoy it. In September, we're going to have, again, the FinTech Nations Matchathon. It won't be 14 days, it will be less, but we're going to have new topics like cryptocurrencies and digital currencies from all over the world on our Coins Nation Summit. So enjoy the summit. All of you who are here and registered, you're going to get an invitation for our September main event. And feel free to reach out for any question. And we are very, very happy to have you here and have you a part of this amazing, amazing summit. So thank you very, very much, and enjoy the summit.
Hong Kong, a city of opportunity, a strategic location that can propel your business to the next level. Perfectly placed to access Asia and the world. Work with the leading thinkers in finance, retail, technology, and transport. Invest where the world's most prominent international brands are flourishing. Become part of an innovative hub with world-class intellectual property protection, where VC funds, university researchers, and tech companies meet to create breakthroughs. Invest in a place that nurtures businesses so they grow, with a competitive and simple tax regime and the world's freest economy. Investing here means having the vision to see the region as a whole, building connections between East and West, making deals flow even faster. Hong Kong remains the region's business center and is the gateway to and out of mainland China, joining people and cultures for a vibrant business community. A city where people are passionate about work and play, to enjoy music, sporting events, culture, and nightlife. Capture opportunities in a booming Bay Area of 11 cities that are getting more connected. Set up shop in a place where an entrepreneurial spirit abounds, where people embrace change and startups thrive. Live and work in a smart city, where fast data and cutting-edge technology means everyday life just got easier. Launch and expand your business where smart also means safe, in one of the world's most secure cities. Invest where you can easily find the talent with the right backgrounds and skills. Invest Hong Kong is here for you to get you started and help you grow. Hong Kong, an unrivaled, world-class city where business goes to grow.
Hello, everyone. My name is King Leong, Head of FinTech at Invest Hong Kong. It's always a great pleasure to work with our fantastic partner, FinTech Nations, and a good friend, Ner, Chorus. Basically, we have had a great privilege to share our Hong Kong story with all of you, the friends in Israel and afar, about the opportunities that we have to offer in Hong Kong. So in the next few minutes, I'm going to walk you through some of the highlights about the Hong Kong FinTech ecosystem and opportunities, as well as how at Invest Hong Kong we can help you enter and explore the Hong Kong markets, as well as the other neighboring markets. So with that, please enjoy the following sharing on the opportunities of Hong Kong.
Hi everyone, my name is Roberto Croci. I'm Managing Director for Microsoft for Startups across Middle East and Africa region. It's a great pleasure being a partner to the FinTech Nations hackathon. We are looking forward to new ideas and we already have a wave of great FinTechs across the region, so we are definitely looking forward to see more innovation happening on the financial services industry. At first glance, fintech investment in the MENA region may not appear very substantial compared to other leading regions. Globally, fintech investments in the MENA region makes up only about 1% of global fintech VC investment. However, VC numbers do not tell the whole story. If you think about it, focusing on that level of investment in the region obscures several other important demographic trends and industry-related developments that are quite favorable to the development of fintech across the Middle East and Africa region. In fact, the fintech space has witnessed huge growth in the MENA region last year. Even in times of COVID-19 and the pandemic, fintech domain topped in terms of the number of VC funding deals in the MENA region. If you look at the Magnet Research, for example, in 2020, the fintech sector attracted approximately 20% of the total number of VC funding deals happened across the MENA region. When it comes to innovation, the fintech sector saw growth with the emergence and acceleration of concepts like buy now, pay later, digital lending, e-wallets, points of sales enablers, and more. Three key factors have been driving the emergence of fintech hubs in the region. First of all, it is an ecosystem conducive to new financial alternatives. It's also an ecosystem where government is at the center of efforts to drive innovation as part of a larger remit. And finally, it's also an ecosystem particularly interested in attracting international talent as a means of stimulating innovation domestically. Think about it, Saudi Arabia and the UAE are working on a regional cryptocurrency solution that was agreed the year before in 2019. Israel has set targets to implement an open banking directive by March 2021. Bahrain has built a live and dynamic domestic fintech ecosystem, Bahrain FinTech Bay, which represents the area's most dynamic and diverse fintech network probably in the region. And in Dubai, regulators like the IFC or in Abu Dhabi ADGM are really pushing the boundaries to enable more innovation coming through fintechs. Think about the IFC. The IFC saw a 25% increase in new companies registering in the first half of 2020, making Dubai home to more than 50% of fintech companies in MENA only. So digital is taking off in the region. So this is a fact. A study from Deloitte, for example, I was reviewing recently, found that about 80% of people in the region are willing to start using fintech solutions. And about 60% of these are motivated to use technology that directly addresses their banking needs. So thanks to a growing need for inclusion and accessibility, I believe the Middle East is slowly but surely going digital. And in May last year, the Gulf Cooperation Council predicted an increased interest in fintech platforms, particularly digital payment apps, due to COVID-19. In fact, the way customers are choosing to manage their finances has changed dramatically, possibly irreversibly, and maybe accelerated by the COVID-19 and the pandemic. And fintechs in the area have been reaping the benefits of the lockdown restrictions and bank branch closures. Perhaps unsurprisingly, Bahrain's digital wallet Benefit Pay saw 1,000% growth in the number of remittance payments through its Fawry platform in March last year alone. Other great kids on the block solutions like Tabi and Spotty, they are two great solutions for buy now, pay later fintech. They both have been founded in the UAE last year during COVID, and they are the region's first buy now and pay later e-commerce offering. Their potential is starting to shine. If you think in June last year, Tabi raised $7 million to fund their growth and secured their launch in Saudi Arabia. So according to Visa, the UAE remains a hub for e-commerce growth, and Middle East nations are ahead of more mature e-commerce markets in terms of internet penetration. So this presents a huge opportunity to create more convenient ways for customers to shop online and to open up e-commerce to a broader demographic. For example, people on lower incomes or people who struggle to access credit might be the ideal target market for this kind of offering. Think about a great fintech from the region like Sarwa. Sarwa was elected by the IFC to receive investment for being one of the most innovative companies in the region. And so far they've raised an impressive $9.10 million in funding. They are an investment advisory platform that helps customers make their money work for them. So their ambition is to help people build a better future with expert, affordable, and easy investing. It starts by establishing your financial goals and risk appetite. Then they create an investing plan that meets your risk tolerance and time horizon. And features such as portfolio rebalancing, auto-depositing, and human advisors help Sarwa to strike the balance of automating investing with a human touch. The fintech ecosystem then in the Middle East is characterized by a certain degree of contradiction and dichotomy with limited alignment between customer expectations and bank offerings. So definitely the ecosystem is evolving rapidly when it comes to deploying innovative solutions. However, it is struggling to attract additional financing that will boost its footprint and impact. On the corporate side of things, banks, financial institutions are keen to engage with fintechs in a broad range of exploratory projects. However, they are still reluctant to integrate fintechs into their strategy, as they prefer, say, to follow a wait-and-see kind of approach. And customer behavior across the Middle East, especially in Saudi, is characterized by a willingness to adopt innovative solutions offered by banks, in particular when it comes to peer-to-peer money transfers, account aggregation, and automated investment advice. However, banks are not really leveraging the full suite of fintech solutions features that are available to address customer needs and requirements to enhance the daily banking journey and experience. And that's probably the key. A lot of the battleground in the future and in the present already is about the customer experience, right? So the way forward, as we see it, when it comes to innovation and technology, is about harmonization and trust. Definitely, there are at least two key levers that require urgent attention to enable the Middle East fintech ecosystem to reach its potential. So one is definitely the need for regulatory harmonization within each of the countries in the Middle East, because in the Middle East fintech ecosystem it's very fragmented, and ultimately across several Middle East countries there are these cross-border payments and different regulations that make it difficult to scale across the region. The second lever is developing trusting relationships between banks and fintechs and integrating the latter in banking strategies on the basis of a long-standing partnership to meet increasing customer expectations. So we touched based upon personalization, right? So banks, if you think about it, banks have been targeting customer microsegments and tailoring offers to them for decades. So it's not an innovative or a new concept, but these capabilities, until recently, have been sufficient to help banks differentiate their institutions, build customer engagement, and gain competitive advantage. But the reality is, this advantage is eroding. Banks are being leapfrogged by retailers and tech-savvy companies that put personalization at the center of their business models and successfully scale it to achieve significant performance gains. The true promise of personalization is being able to go beyond next best offers and targeted marketing and create more customized, relevant end-to-end experiences for customers. So in order to achieve this, banks must really understand what personalization is, but also what personalization is not, and really forge a strategic agenda to scale it. Because personalization in banking is not primarily about selling. We believe that it's mainly about providing service, provide information, provide advice, often on a daily basis or even several times a day. So such interactions, as opposed to infrequent sales communications, as is still the case today, are at the center of the customer's banking experience. Yet many banks still tend to focus their personalization efforts on the sales arena. So that's why we believe that a new breed of challenger banks and fintechs are already making their name in the market They come without the legacy of traditional banks and with an incredible focus on customer experience, as we were saying, but also on loyalty, on personalization. And guess what? Time is of the essence. Those institutions that seize the challenge most rapidly and deliver true end-to-end personalization will create a significant advantage over their competitors. And this is the role that Microsoft is playing by being a technology player that provides startups in the region access to technology and access to markets. We have a program, Microsoft for Startups, that we launched in the region a year ago to onboard startups that meet some criteria, that startups that have enterprise solutions that address use cases and challenges that corporates have in fintech space, that banks and financial institutions have, to provide this innovation and being agile and really bring new innovation and real value and impact to the corporates. So on the technology side, we definitely help startups that join the program with access to technology in terms of credits to build on Microsoft Azure, but also licenses for other products. And we support startups when it comes to building a solid architecture, optimizing their costs, integrating with third-party apps, plugging into Sandbox or digital labs, and building products that can scale. Think about also a roadmap to the future. We are doing a lot of investment, for example, in quantum computing. And technology has always played an important role in the financial sector. So quantum computing, with its ability, will be able to solve much complex problems and is also expected to answer some of the most challenging questions in the financial services industry. For example, quantum computing is expected to be a strong driver for innovation, revolutionizing trading, credit scoring, underwriting, risk management, cybersecurity. So this is one side of the help we provide to startups in the region, to fintechs in the region. The other side is go-to-market. So in our program, we designed a journey where we onboard startups onto the Microsoft Marketplace. We help the startup to publish their solution, offer trials, becoming transactable. So we take the startup on a journey to move from being market ready to be more enterprise ready, appealing to corporates, appealing to financial institutions and banks. And the ones that will become transactable on the marketplace, we can turn them into partners, where we have designed a sales incentive process for our Microsoft sellers and partners to help accelerate sales and growth for startups that will become co-sell ready and co-sell with Microsoft. So for us, this is a huge point of differentiation. It's a huge focus in the region. For example, we helped a startup that built a solution to digitize the claim process for insurance companies built on Microsoft Azure and blockchain to close deals with 8 out of the 9 largest insurance companies in the UAE. And then we're helping them scale across the broader Middle East region, from Saudi to Kuwait and Bahrain to start with. I hope the session was useful, relevant, and definitely reach out to me for further engagement on fintech and financial services when it comes to startups and innovation in the region. Looking forward to being in touch, and really excited and thrilled about an exciting hackathon with FinTech Nations this year. Thank you. Thank you very much. Have a very good day.
Startups face many challenges as they look to scale and grow. These challenges vary from access to customers, access to funding, closing funding many a times, as well as the ability to work with partners and stakeholders in an efficient and organized manner.
We are really excited to bring the Microsoft for Startups program to the Middle East region because we see a unique opportunity to help startups in the region to thrive and accelerate their growth.
The program is built on 2 pillars: access to technology, where Microsoft enables the startups on its technology, Then the second pillar is go-to-market. We take a community approach to our Microsoft for Startups program in the Middle East. That means through social networking sessions with VCs, corporate partners, as well as our startup community partners such as incubators and accelerators, we provide access in a shared environment for idea sharing and opportunity sharing. Well, first of all, for the startups, we help them cut costs, but we also accelerate their sales, whilst we support them from a technological perspective and we mentor them throughout this whole process.
We are always looking for startups to join our program.
If you are a high-growth, high-potential startup and looking for the next step up, reach out to us either via the social media channels, directly via one of the team members, or our landing page.
Pioneer it, grow, repeat.
Employees around
Pioneer it, grow, repeat. Pioneer it, grow, buy inventory, expand your business, go global. Pioneer Capital Advance.
Cash flow. If you own an e-commerce business, you know how much you depend on access to working capital to grow. We're here to help. Pioneer Capital Advance is the ideal cash flow management solution designed specifically for marketplace sellers. Now, based on your store's recent sales, we'll extend to you an offer of up to 100% of your monthly store value. Holiday season coming up? With Capital Advance, you'll be able to manage inventory effectively so you're prepared for those peak periods. Opportunities need to be grabbed. So what's next for your business? Expanding into new categories, more marketplaces, additional countries, upgrading your operations, or investing in marketing and promotions? Look, we understand e-commerce, and that's why we offer you the best terms. Just one click and the money is in your account. Now, in order to leave you with sufficient cash flow to manage your day-to-day, we collect the funds gradually and only as a percentage of your future payments. The more you grow, the more working capital you'll stand to gain. So, what are you waiting for?
Very excited to be here today with you and to take part in the FinTech Hackathon of 2021. My name is Daphna Birgel-Rubin. I'm heading the Working Capital Business Growth and Strategic Partnership at Pioneer. Pioneer is an amazing company in which I've been working the last 5 years that has originally been focused on B2B cross-border payments. We've seen along the years customers growing their businesses with us and have always been preoccupied by how could we help them grow even more. We were trying to think if beyond payments there was additional value that we could offer our customers to enable and ease their path to grow. And this is how, 4 years ago, we've decided to enter the working capital arena and support our customers by giving them access to additional funds to support their journeys and growth.
So let's start. Looking at the global cash flow challenges, we can see that the need for cash is regular and consistent. 61% of businesses regularly struggle with cash flow. We also see that almost half of the businesses have actually faced financial challenges during the last year. And we know that cash flow is one of the main reasons new business fail due to not having enough cash to overcome periodical needs. So it's clear, it's there and it's challenging, and it's almost for everyone. We know that even though the demand for capital has been steadily rising, and we've seen that over the last few years, SMBs clearly are underserved, what we call unbanked when referring to accessing financial services. The main reasons are outdated underwriting processes and poor customer experience that customers have to go through. So SMBs find themselves and have to compromise. They use their own funds, or they have to settle for less capital than they need, or they actually should receive based on their performance. This unfair situation embodies an untapped opportunity for alternative lenders who will be able to look at it from a techie, innovative point of view. And this is what at Pioneer we're trying to do here. So the gap that we've just discussed is not left empty, and fintech, payment providers, lending platforms have started to fill it in. They are making lending transactions accessible and flexible for SMBs by digitalizing the application processes as they look for alternative sources of data than the traditional lenders do. Also, they do it by being techie, and they can quickly integrate and take advantage of this data. And lastly, by also using innovating banking approaches, they make paper-based processes redundant and rely on new technologies such as artificial intelligence, machine learning, and also we see automated tools and digital channels supported it. Based on an article from the Business Insider in 2019, alternative financial providers accounted for 2% of the UK SMB lending market in 2018. While this year, by the end of 2021, they are actually expected to be 9.1%, which is 450% more than in just 2 years. In order to survive the pandemic and follow the market, businesses had to adjust their business models. This has pushed to the extreme trends that already started even prior to the COVID. Smarter underwriting, which is the risk assessment behind a seller, became a deal breaker, became so essential in order to make it. And paper-based processes just fell apart. So companies that weren't wise, quick, and tech enough to actually support and enrich the underwriting processes and make it digital just fell apart and weren't able to go through it. Pioneer and e-commerce is a long relationship dating from almost more than 10 years ago. Deeply understanding the market, the sellers, the trends, and the specific needs that sellers are facing are the foundation stones for our ability to support customers through working capital here at Pioneer. So, as I told you, when we look at the e-commerce, we see some meaningful and critical challenges that are facing. The wait for cash is long. The sellers have to cover for inventory, for shipping, for marketing, delivery costs, and there are many more, while payments only come much later in the flow. That's a real difficulty that sellers have to face day by day. So additional funding sources are required to streamline the typical cash flow fluctuation. We also know that when selling, it's all about inventory, or mostly. A seller must know that he has the financial ability to act upon a valuable, unique opportunity that come along. So for example, when you think of bulk prices, right? When a customer has the ability to buy at a discounted price, a high amount of pieces of inventory. A seller has to know that he has the ability to actually take it and take advantage of it. Not having that capability can kill their businesses. And last is seasonality. And we hear it from so many customers and so many sellers along the industry. It's very typical for sellers. And it's, of course, based on the product that they sell. So much, for example, a product that is more summer-oriented or winter-oriented. But sellers must be ready ahead of time in order to be there with the product on time. So they start much earlier than they actually sell it. And that requires a compensation in form of working capital to streamline the fluctuation and to absorb these differences during the year. This is very typical for the e-commerce. So when we look at, for example, here at the selling cycle, we see that everything starts at the manufacturer, and then it's shipped to the warehouse, where sometimes it has to be packed or a logo should be added, and then it would go to the marketplace, sold to the customer, the marketplace collect the money, and then only the seller gets paid. So time from manufacturer until the sellers actually get paid can take up to 6 months, and that's their selling cycle. And that's the cash flow cycle that we, as alternative lenders, have to address. Pioneer Capital Advance product is a capital from a type of merchant cash advance. So we actually purchase future receivables. This is a product that is tailor-made for e-commerce sellers and really adjusted to their flow, to the technologies that they use, and to the different integration that they have. We offer up to 150% from the seller's average volume, monthly volume. And the seller has to settle it gradually, always leaving him or her enough cash to manage their day-to-day expenses, which is something that is very different from a loan, where in loan we know that we have fixed installments and whatever happens, a seller would have to pay back the installment. We actually kind of partner with the seller because we bear some of the risk. So if the setting of a seller goes up, we would actually settle more quickly. If they actually go down, we would take a big part, and that would take longer to pay it back. Also, the fees are fixed. So no matter how long it will take, we talked about it, is it short or longer than expected? No matter what, the fees are fixed, and we would only collect at the end with the final settlement, no matter how long it is. So it's a very convenient seller, made for sellers that sell online and very adjusted to their day-to-day reality. As I shared with you before, so at the beginning, we started at Payoneer way around cross-border payments, and that actually positioned us in a very unique position in the market. So first, we have a very smart capability to underwrite. We have access to large set of data, KYC, marketplace payment volumes, the fund usage of our sellers. We also use superior risk management technologies such as artificial intelligence and machine learning. And last, we have the ability to see the funds flowing in as they go through Payoneer, which gives us a higher level of control and a lower level of risk. Another uniqueness that we have at Payoneer is actually the fact that our product and our ability to make the process digital and instant. We do not do credit checks. We do all the underwriting based on the data that we have at Payoneer. It's immediate. We pre-approve our offer. So if a customer receives an offer, it's immediately there and no deny of an offer. And the funds are instantly, within up to 2 minutes, loaded and in their accounts, free for use without any limitation. So it's very easy again and not hard to get. Last is the access that we have to Payoneer's assets. So Payoneer has a huge customer base, which we can take advantage of. We also have at Payoneer a set of existing alliances with well-known marketplaces and the ability to leverage data. And not only that we have this set of alliances, but we also look at the customer from the customer point of view, at the volume coming in, and it gives us a unique view, a wide view across marketplaces, and the ability to support a seller around all of his activity and not only based on one marketplace. So looking at how it actually goes, and this is an example, you can look on the top in blue. This is the 100,000 that the customer would take as an advancement. Above the line, you see in pink all of the payouts that are coming from the marketplace, and below in orange, below the line, you can see the part that we take to settle the advancement. In this example is about 35%. So from the first example, when 28,500 comes in, we would take 10,000 to settle the advancement, and that goes on and on and on until the customers fully settled the advancement that we gave. And only at the end, you would see 3,500 added as fees for the advancement. And that wouldn't change as we discuss it. When we look at the advantages, so again, the funds are instantly in the account, free for use, very easy. The process is do not touch any credit checks, no collaterals, it's pre-approved. It's really there waiting for them to click and take it. The fees are low and attractive and fixed. So it means that they do not change, even if they take them 3 months or 4 months or 5 months to pay it back. No matter how long it takes, no additional costs are added. The seller would repay only with getting paid for the marketplace. So again, that's kind of a partnership that we have with the seller, because we bear some of the risk. And the settlement is gradual from the marketplace, and always leaving the seller some cash to manage their day-to-day expenses. I would like to end up just by telling you and sharing with you a customer story that I think and feel reflects so accurately and nicely the support that the working capital product gives to businesses. So it's all about the bass as the song, but we look at it as it's all about the growth. And here it's an example of a customer that's been with us since mid-2018. But the example is actually focusing on the COVID pandemic period. This is a domestic seller selling in the US, selling toys. He actually started when he was 11, only 11 years old, selling. And he has been using the working capital and taking advantage of this product for a long period. But during COVID, it became much more crucial because actually many opportunities came in for him. And he shared with us that the way he actually used the funds and took advantage of that advancement was by entering new product categories. So he told us that prior to COVID, he was not selling puzzles, and through the cash and the support we gave him during the pandemic, he actually entered that category and was able to make $750,000 of sales in puzzle during 2020. Another product that he started to sell was the inflatable pools, and that was mostly because people stayed at home and were looking for things that they can do and together with the family and the kids. So inflatable pools, he started to sell it, and he was able to make it one of his top selling SKUs during 2020. He also used, of course, the cash to purchase inventory and to expand his warehouse presence by, I think, 30,000 square feet during 2020, and looking to do even more in 2021. So let's look at it in his own words. Payoneer's working capital program has allowed us to alleviate some of the stress associated with being a predominantly seasonal company, providing us with quick access to cash flow opportunities that might present themselves in our historical seasons based on our established performance. I think it summarized so nicely the support that at Payoneer, the goal that we've put to ourselves to support customers to grow along their way and to be there to enable more and beyond payments. So thank you for listening, and thank you for being here with me. It was a pleasure. Feel free to reach out through email or LinkedIn. And good luck and happy 2021. See you. Bye.
The world has changed in ways we could never have imagined. 15 years ago, Payoneer was on the cusp of a new digital era. Now we are at the heart of it. The way we buy goods and services has become truly digitalized, where local and cross-border are almost indistinguishable. Online marketplaces have grown significantly, with strong tailwinds for e-commerce and mobile commerce. It's no longer about who or where you are. Now is the age of what you have to offer. Today is about your talent, your drive, and your determination. Payoneer connects the digital world on a single platform, making it as easy to do business globally as it is locally. Payoneer democratizes access to financial services for millions of small businesses and entrepreneurs in both emerging and developed markets. With a commitment to delivering the best possible customer experience, our multi-currency account, B2B payment platform, and commerce-enabling services make doing global business local, accessible, and seamless. Businesses turn to Payoneer to pay and get paid, manage their business, and invest in the next stage of their growth. The world's leading digital brands turn to Payoneer to simplify and streamline access to the whole world. Our trusted mass payouts offering for marketplace and platform ecosystems is powering fast-growing verticals such as e-commerce, freelancing, travel, and more. We are redefining global payment acceptance through frictionless next-generation merchant services. Our payment orchestration platform puts merchants in control of their payment setup, connecting them to a vast network of global and local payments providers through a single integration. One of our core values is inclusion. At Payoneer, we believe that anyone, anywhere can achieve their potential in our digital interconnected world if just given the chance. Our global infrastructure, global brand, and global presence position us to drive global growth for our customers today and tomorrow.
Hi everybody, my name is Adam and I'm Payoneer's GM of Enterprise. Payoneer is a global payment company that connects the world together on a single platform, making it as easy to do business globally as it is locally. In my role, I get to work closely with some of the leading marketplaces in the world. And I'm really excited to be here today and speak about some of the trends we're seeing with marketplaces and the financial services that Payoneer offers to them. What I mean by a marketplace is a two-sided network of buyers and sellers. Marketplaces benefit from great advantages. Network effect is a key advantage. The more buyers you have as a marketplace, the more sellers your marketplace will attract, and vice versa. This makes it really hard to compete with dominant marketplaces. Third-party seller innovation creates what Chris Anderson coined a long tail of products that can cater to very different tastes. And then Airbnb, as an example, has more apartments than all of the rooms that the top 10 hotel chains have together. But it is asset light in that it doesn't own a single apartment. So how successful are marketplaces exactly? One data point that I find striking is that in e-commerce, which is the main category in online commerce, marketplaces not only represent more than 60% of all business or all GMV, but that share is actually growing by about 1% every year. Another important point is that marketplaces continue to innovate and enter or even create new verticals, such as the sharing economy. We all know the story of Amazon and the story of its success. It started from selling books, and now it sells everything. It dominates e-commerce in the West with a 40% market share in the US. It has invested heavily in its platform and was a losing business for 20 years. Amazon is known to be religious about delighting consumers through speed, convenience, price, and selection. But again, how successful is Amazon really? Well, Amazon is worth more than $1.5 trillion, which is more than the aggregate value of the next dozen top US retailers. So given how successful and big Amazon is, and the network effects that it benefits from, is there room for anybody else as an e-commerce marketplace? Despite all of Amazon's success, when taking a broader view, there's reason to believe that other marketplaces may be successful too. First, Amazon is gigantic, that's true, but it actually has only 8% of the global GMV of marketplaces and is smaller than Taobao and Tmall, the Chinese e-commerce giants. And importantly, there are multiple players who will be able to compete more and more with Amazon through differentiated offerings and technologies. I'd like to call out in particular social and media platforms such as Google, Facebook, TikTok, and Instagram, and e-commerce platforms such as Shopify and WooCommerce, who I believe will play a hugely important role in the future of e-commerce. Before we get to them though, let's go back to Walmart, who used to dominate retail, not unlike how Amazon dominates online retail today. Despite being a more traditional business and of course an offline business, Walmart is developing its online business and its marketplace incredibly quickly. Today, more than 90% of Walmart's catalog is offered by third-party sellers. And as you can see on the right, the number of sellers has grown tremendously, and they now have more than 75,000 sellers on their site. Not all traditional retailers have been successful in that way, but Walmart shows that it can be done. Etsy is an interesting and successful marketplace that focuses on handmade products. While Amazon is the giant generalist who is obsessed by consumer satisfaction, Etsy has a more balanced approach to sellers and a strong sense of community. Amazon copied Etsy and launched Handmade at Amazon in October 2015. But as you can see on the right, Etsy has been very successful since, and its stock price grew from about $14 to more than $200 today. The success of Etsy shows that there's room for specialized niche marketplaces and their ability to compete over time with the giant generalists. Social and media platforms such as Google and Facebook will have a huge role in the future of e-commerce. There's an opportunity for them to build an e-commerce business on top of their advertising business. They are also strongly incentivized to do this because their core advertising business is under pressure by Amazon, as more and more consumers start their buying journey directly on Amazon. They have, of course, great assets that they can leverage, such as their advertising platforms, customer base, brands, capital, and technology. It will be really interesting to see how this trend evolves over time. Shopify obviously is a successful e-commerce platform. As you can see on the right, Shopify now commands about 6% of the e-commerce market share in the US and is second only to Amazon. Sellers can easily build an e-commerce website or an independent store and benefit from the tools Shopify provides them with to run and scale their business. Sellers don't want to be completely dependent on marketplaces such as Amazon. They want to control their own destiny, and they can do that with their own independent stores that they build on Shopify. Marketplaces become more demanding on quality and keep creating pressure on prices. And some marketplaces, such as Amazon, engage directly with manufacturers who start to sell online and disintermediate third-party sellers. In the future, it looks like sellers will need to either build their own brand or have manufacturing capabilities in order to benefit from sustainable success. Shopify today is a quasi-payments and financial services company. As you can see on the right, most of its revenues today are driven by Shopify's merchant solutions, which includes primarily of payments. In fact, from 2016 to 2019, the merchant solutions revenues grew by 366%, and the gross profit contribution by 482%. So what do marketplaces aim to accomplish through payments and financial services? Quite a few things. They want to sell to buyers around the world and offer to them local payment methods. They want to optimize the buyer experience through an optimized checkout experience and ensure quality in products and services, such as on-time delivery. They want their sellers to grow by providing them with tools to manage their business and working capital. They aim to reduce all kinds of risks that can be driven from both sides of the marketplace: fraud, counterfeit, financial, and regulatory risk. And naturally, they want to reduce costs and investments. I'd like to switch gears now and talk about the role that we play at Payoneer in partnering with marketplaces. Payoneer works with more than 2,000 marketplaces globally. E-commerce is obviously an area of focus for us, with clients such as Walmart, eBay, Wayfair, and Mercado Libre. But we operate in many verticals, including services, travel, digital royalties, gaming, and live streaming. We offer marketplaces a suite of financial services, including pay-in and pay-out, payment orchestration, FX services, financial services for their sellers, seller risk services, and access to our global network of sellers. I'm happy to say that we have partnered with eBay to help them expand eBay's managed payments platform to dozens of new countries, including Greater China. They are leveraging our global coverage, advanced KYC and risk capabilities, and our offerings for sellers. We offer a complete mass payment solution for marketplaces. It is used today by thousands of clients, including the likes of eBay, Airbnb, and Walmart. Payoneer offers a single point of integration to access the entire world. We offer flexible implementation models, such as APIs or a portal admin, and rich analytics. We have redundancies in 145 markets and are integrated into more than 150 local clearinghouses and support more than 100 currencies. We take the burden away from our clients and take care of areas such as regulation, operations, customer support, and taxes. As a platform for platforms, we also serve both sides of the marketplace. Payoneer is a brand. We have 5 million users globally. Payoneer.com is the top 1,000 site in the world. We have offices and local teams in more than 20 key markets and work closely with SMB communities. In 2019, we had more than 200 events in 75 cities around the world. We offer a suite of financial services for sellers too. They can get paid from a wide range of marketplaces and also from their direct customers. They can manage FX and take working capital offers. Their account is integrated with local ERPs and service providers. And they can spend the funds they earn in a number of ways, including paying to their suppliers or buying online through their Payoneer MasterCard card. When it comes to sellers, we have unique KYC, economic, and behavioral data sets that help our clients better manage risks on their platforms. We have the technology and large teams of experienced analysts that are experts in these domains. And last but not least, we now offer payments orchestration services. The offering is based on an acquisition we made in early 2020 of a Munich-based startup called Optile. Through payments orchestration, merchants can easily work with multiple acquirers and PSPs through a single integration. They benefit from a unified payments infrastructure, including back-end processes, checkout experience, and tokenization. Orchestration empowers merchants and marketplaces to control their destiny and not be dependent on their PSPs. This is what I have for you today. I'm happy to continue talking with you. You're welcome to reach out to me to my email, adamco@payoneer.com, or through my LinkedIn profile. It was a pleasure talking to you today. Bye, thank you.
My name is Will and I'm a principal engineer at Curve, having joined in January 2020, so just over a year ago. I got into software engineering in a slightly unconventional manner. I didn't actually learn at university. I got a computer when I was age 14 and I never really looked back. In fact, I never really went outside. I spent a lot of time on that computer. My parents were not best pleased then, but I've turned out okay. Curve is growing really quickly. We've just closed our Series C funding round, having raised an additional $95 million to continue to fuel our global growth. In terms of headcount, we're growing from 300 at the moment up to 650 by the end of the year. One of the primary reasons is because it offers such a wide range of opportunities internally. It's an incredibly varied role that I've got. This is not your typical fintech. We're not just doing the same as other people. We're not looking and going, okay, what are other people doing? We're really stopping and thinking for ourselves, what do we want to build? What do our customers actually want? We want to get into their minds and truly understand and solve problems in a way that hasn't been done elsewhere. We want to fulfill our mission to be the one place to see, spend, send and save. The scale of the work that we do is global, so we're available in Europe at the moment. We're just about to launch in the United States, but as you can imagine, we're not going to stop there. We're at a wonderful stage where every engineer can make a real, measurable difference. We use some of the latest engineering practices and we're continually striving to improve those. We don't stop and ever think, okay, job done. If you've got ideas, if you want to make changes to the application or to some of the services that we offer to our customers, then we're able to execute on those incredibly quickly. On a daily basis, we work in an extremely agile way, using practices such as pair programming and test-driven development. Yes, we also use continuous integration and continuous delivery, and that really ties in with our bias fraction. For us, it's incredibly important that we are continually innovating, that we're continually evolving and improving what's going on in our customers' hands. Within the wider engineering team, we're making and releasing dozens of changes every day. We use Go for our microservices as the main language, and Swift and Kotlin for iOS and Android respectively. Our machine learning teams are building out incredibly sophisticated models that help to protect our customers and help us to actually serve them better. My team is building out Curve Credit, and we've got a simple goal: to be the fairest lender in the world. We're due to launch soon, and I can't wait. But this is just one of many features that's part of Curve, and seeking to give our customers truly unparalleled control over their money. If you'd like to work at a company that offers truly fantastic growth opportunities and the chance to make a real difference, then I'd encourage you to apply to join Curve. We're restless, we really don't sit still. We're looking for change makers, we're looking for innovators just like you. Visit curve.com/careers today, and I hope to be working with some of you in the future. Wishing you the very best of luck with the hackathon.
Hello, everyone. This is Sanjeev, founder and CEO of Whiteside. It's such a pleasure to be a part of the third series of FinTech Nations event. So today we are gonna talk about some of the neobanking trends that we are witnessing in the market. Starting off, as you can see on your screen, I have put together the top 20 most valued neobanks today that exist across the world at this point in time. And this is a list of independent neobanks who are not owned by any bank or an enterprise. These are the neobanks who started as a pure startup, and then they have grown over the next couple of years during their lifespan. So if you look at the list, it's quite a varied list. By variation, what I mean, these banks come from different geographies. These banks have a very different business model if you look at the list. So the list is obviously dominated by some of the countries which have emerged as fintech hubs across the world. However, there are new countries also which are coming up. For example, traditional fintech hubs like United States, UK, and Europe has a presence of almost 60 to 70% of the most valued neobanks come from these regions. However, Latin America and Latin American countries like Brazil, Mexico, etc., are also contributing to the most valued neobanks. And incidentally, Nubank, which is which is the most valued independent neobanks today, is from Brazil, and now they have expanded to multiple geographies in Latin America. And currently, the valuation stands at $25 billion after their fundraise in January. And this is how the neobanking space is growing and flourishing. Also, if you look at the business models, there are quite a few banks who started with a not so simple product like credit product first, and then they have introduced other savings account, payments, investment product to their portfolio. Nubank is one such example. The other bank on the list which started from credit was Tinkoff. To some extent, you can say SoFi also started from credit. So we have quite a few banks in this list who have started from credit, whereas a majority of the banks today which are featuring in this list obviously have started from either a payment product like a prepaid card or from a savings account, current account kind of a product. So moving on, we are going to see how these neobanks have created a massive impact across the world. And we will also look at their business model and operating model along with their tech stack, which has contributed to this stellar growth. Moving onwards, if you look at the neobank user base, the top 7 neobanks today almost have more than 100 million customers. And that's a massive statement in itself. And the customer base keeps on growing every month, every week, every day, in fact, every hour. And banks like Nubank, they claim 34 million customers in a couple of geographies that they are currently serving in Latin America. Whereas other banks like Revolut, Chime, Tinkoff, all of them have more than 10 million customers. Moving on to the funding status that these banks enjoy, if you look at the funding, SoFi leads the list. They have almost $3 billion of funding, given their latest funding that they have raised. And they have also gone through Spark IPO very recently, which has led a jump in their valuation numbers. Nubank also raised $400 million earlier this year. And if you see the list in the bottom section, we have highlighted those banks who have managed to raise funding in the first 2 months of the year. So if you see the list, out of 20, we have quite a few number. Almost 6 banks have managed to raise funding in just the 2 months that have gone by. And the frenzy is expected to continue even in the coming time. This slide is an interesting one because it shows how fast these neobanks have become unicorn, because that's one of the major milestones in the existence of any fintech or any tech startup for that matter, that how soon they can get the unicorn status. And if you look at this list, some of the neobanks who were quickest to acquire the unicorn status were actually not a retail neobank. So one of the quickest to get to the unicorn status was Oak North, which is a SMB-focused neobank. However, apart from Oak North, if you see other neobanks, especially C6, which comes from Latin America, and Dave and Revolut, these are retail-focused neobanks. On the other extreme, if you see Tinkoff Bank, which has taken the maximum amount of time to become a unicorn. However, if you see the timeline of their evolution, they were one of the first neobanks to come onto this planet. And also they are from a region which is not so investor friendly, so to say. So in order to execute the strategy and become a unicorn, despite not getting funding as easily as other neobanks have gotten, this is something that Tinkoff must get credit for. Also, quite a few banks are still to become unicorn on this list, and I'm sure 2021 will be the year when the remaining 5 banks which you see on this slide, which are yet to be a unicorn, will turn unicorn this year. So moving on, this slide basically presents what it takes to become a successful neobank. Here we have looked at the team constituents and the team attributes, the leadership team of the neobank. And if you look at this slide, it tells a very different story. It's not like the neobank founders are always young, fresh out of the college. We can see very different extremes if you are looking at the average years of experience of the founders of these neobanks. On one end, Atom Bank has almost 23 years of average experience of co-founders. However, N26 is probably one of the youngest leadership teams that they kind of brand. Almost 36% of the neobank founders are serial entrepreneurs because they have founded a company before they started a neobank company. But the one thing that really is a blot on the success of the neobanks is the gender diversity. And if you look at the female representation of the top 20 neobanks, we have an abysmal less than 1% female representation if you look at the founding team of these top 20 independent neobanks. Also, in terms of the professional background of the neobank founders, it's not like most of them are coming from finance. there is a very good mix of domain from which the neobank founders have come across. As you can see, quite a few have come from technology, quite a few have come from consulting. And obviously, finance is one of the segments which has contributed to the founding team of neobank. This slide basically talks about the operating model decisions that these neobanks have taken in terms of the regulatory license that they have acquired and also the sponsor banks that they have partnered with. So if you look at the regulatory license that these banks have, quite a few have a banking license today. However, this was not the case just a couple of years back. In fact, just the last year, SoFi and Varo have managed to get a license, while quite a few on this list still do not have a banking license. They still operate with a payment license, an e-money license, or a lending license or a stockbroking license. In terms of partnering with sponsor banks, which is one of the preferred model of operating in the US because of the complex regulatory structure there, quite a few banks partner with Bancorp and other community banks in the United States. And you can see the way this partnership works, it gives access to deposits and customers to the community banks, which is powering the neobanks. And in return, the neobanks manage to launch their products and acquire customers without going through the licensing process. So this is one way where incumbent community neobanks have supported the neobank phenomenon in the United States. The other thing that we need to look at is the tech stack that these neobanks utilize in order to power their operations. And the most important part of their tech stack is obviously the core banking system. And if you look at the strategy that these neobanks have followed, quite a few early neobanks, especially in the UK, like Monzo, Revolut, Starling, and quite a few in Brazil, like Nubank and Neon, and of course, one of the first neobanks, Tinkoff, they managed to build the core in-house because at that time, the cloud native core was not available and it made sense for them to go to a tech strategy which will give them flexibility and control to innovate while keeping the technical debt to the minimum. Quite a few have also opted for neo-core banking providers like Nambu and Thought Machine, whereas there are a few neobanks who are still running with the traditional incumbent core banking providers. However, some of these core banking providers have managed to provide the solution on cloud rather than on-premise. In terms of middleware partners, which includes banking as a service as well as card processing companies, Galileo is the standout leader, which powers almost 50% of the top 20 neobanks, whereas some other banking as a service companies are Synapse, Camber, and Cross River, which are partnering with the other neobanks operating in the United States. So this covers our journey of top 20 neobanks, most valued neobanks in the world. There's another trend that we are tracking very closely at Whiteside, which is the Gen Z focused neobanks, the neobanks who are focusing on kids and teens as the next generation is coming up with a very different behavior, which is mobile only, which is digital only. So these are the customer segments that some of the neobanks have focused solely on. Whereas there are other companies who are now coming and launching products which is focused towards kids and teen segment of the customers. And there's a lot of funding that has been raised by Gen Z focused neobanks. This phenomenon is not restricted to only the developed markets. In fact, if you see this list, quite a few neobanks have come from Africa, India, Vietnam, Malaysia, South Korea. where we see that the Gen Z focused neobanking phenomenon has become truly global because the behavior that a teenager has these days may or may not be a function of the geography he belongs to, because the digital behavior is pretty much the same all across. So this type of a demographic and behavioral niche segment, which is Gen Z and kids segment, is getting a lot of attention from the new neobanks as well as from the existing neobanks. The other segment which we are tracking at Whiteside very closely and which is getting a lot of attention, especially in the times that we are coming out of the pandemic, is the small and medium enterprise neobanks. So if you look at the small and medium businesses, they face quite a lot of challenges, not just in terms of accessing the financial products, but also in terms of accessing the business products. And what I mean by business products is anything that helps them execute their business problems efficiently, whether it is accounting, whether it is communication, whether it is payroll, whether it is payment to cross-border suppliers, or accepting payments in form of card or QR code, etc. All these solutions are not provided in a single interface to business owners, and they have to run around to access these applications in a siloed manner. And this is one problem that the neobanking platforms are aiming to solve, where they have created an integrated business tool interface that provides access to all these tools and business services from one platform. And the neobanking platform becomes the single source of truth for the business owner. This diagram also depicts the operating model of the SMB-focused neobanks, especially in the United States. Because if you look at the way the retail neobanks function in the United States, the SMB neobanks function in the same manner, where they have to either partner with a sponsor bank in the back end, or they have to partner with a banking as a service provider in the back end, which enables them get access to the core banking system of the community bank that they are partnering with. And apart from that, they also partner with the card networks to issue the debit cards, along with their partnerships with API providers, which provide them access to data from different bank accounts, different payment accounts that the customer may have. So this is the way the business model and the operating model of a SMB neobank is established, especially in the United States today. And we are very bullish on the SMB and the Gen Z segment in terms of the next evolutionary curve in the neobanking is supposed to come from these two segments, because these are the two segments which is still very nascent in terms of adoption, in terms of launches. So we are hoping that we'll get to see a lot of action from these two segments, specifically from the neobanking startups. Thank you all for listening. Have a great event. Thank you again. Bye.
Hi, everybody. My name is Edwin, and I work at Mox Bank. Mox is a new virtual bank in Hong Kong, launched last September by Standard Chartered. First of all, we really want to extend our gratitude and a massive thank you to FinTech Nations for the opportunity to talk a little bit more about Mox, our journey that we've had so far, the products that we've launched, as well as most importantly, I've been asked to share why customers love Mox. We've thought and we thought, what better way than to actually have our customers share their experiences of Mox and what's their feedback on Mox. So with that, let us go to a video. All right, thank you very much for that. The reason why we wanted to show that video was a few folds. It was really, whether it was someone was 18, so the students at the very end, or someone that perhaps a little bit elder, the grandfather at the beginning with the puppy, what binds all these groups of people together is just a really, really good digital banking experience through Mox. And that community, or that community of Generation Mox as a staff, is what really excites us and want us to do more for our customers. So our journey has been one that started all the way back in 2017, when the HKMA first proposed the notion of virtual banks in Hong Kong. The license application happened in around 2018. We were one of the first banks to receive the licenses in 2019, and all these banks have now kind of come into the market in 2020. I think part of what we've done, and we start to see these in the initial results, really goes back to the foundations. So this was around when we applied for the licenses and all the work we've done to identify the pain points around banking in Hong Kong. So one of the first steps we actually took was we did 2,000 plus ethnographic research and surveys just to understand consumers' behaviors on what were their needs and what were some of the areas that they felt the current banks in Hong Kong couldn't quite help them solve. Some of them I'd say are obvious. So perhaps the branch waiting times, or at times the response and the feedback. Another point that probably came through quite strongly was a lot of banks were great, but they didn't really help them plan for the future. And for us, a lot of what we do, I'd say everything that we do, actually goes back to that foundation of the customer research, the customer feedback, and always listening to what the customer is looking for and quickly iterating on the process. And a lot of what we do, if we can kind of dive a little bit deeper on the product set, is really around driving micro innovation. So for example, our interest rate, by and large, a lot of similarities, but the kind of micro tweak we've done is offering a daily interest rate. And this was really in response to people feeling that you only earn that higher interest rates when you bring a lot of AUM to a new bank, or it's always a lot of new funds. And we really wanted to make that simple. So whether you're saving $100 with us or $100,000 with us, you earn that same competitive interest rates from the very start, and you earn it daily. So you can almost see it. So that's why, back to one of the first comments in that video, where people just enjoyed seeing, especially in this ultra low interest rate environment in Hong Kong or globally, where you can just see a little bit of money earned, and it just encourages and nudges you. And again, around the savings, the other thing we've innovated in Hong Kong was to offer goals accounts. And it was, again, in response to research we did earlier, where a lot of people would open various bank accounts, where one was predominantly aimed at saving. So you'd set recurring kind of saving instructions to the other bank with the goal of kind of achieving your saving targets in the end. What we've done is just to make that process really intuitive within our app, and you can very quickly or instantly create a sub account, personalize it as you see fit, give it a name for that goal, and then kind of add that picture. And again, it goes back to a lot of the research we've done, where a lot of times when you give your goal meanings, you're just more likely to stick to it. Another thing we've done, and you've seen a lot of the customers kind of show their card, and I'm able to do the same because we were one of the first banks in Asia to offer a numberless bank card in partnership with MasterCard. And again, the micro innovation there was really a lot of people prioritize security very high up, and understandably so. So it was really about, every time you pass your card at a restaurant or in a shops, it just kind of gives you that extra peace of mind to ensure that all of your data can only be unlocked directly on your phone through the app. And I guess, there are a lot of micro innovations that we can talk about, but as another example, another kind of first that we've done is to also change the cashback mentality, where cashback, obviously nothing new, but what we wanted to do was, make it instant. A lot of times, various banks in Hong Kong could take a fulfillment period, especially for higher tier cashbacks, and we just wanted to make sure it could go back into your account daily. The next kind of micro innovation we did around cashback was to credit it back to your kind of bank account, so your Mox account, rather than into your credit card account or into your card account, etc. And again, the advantage there is you can start earning interest right away. So that's why I'd say for us, a lot of what we've done is always listen to the customers and do this repetitively and regularly. We started this journey all the way before the bank was launched, and we're continuously doing this on a regular basis. Next is really based on these pain points that your customers have told you, what are these micro innovations that we could tweak and we could kind of extend to make the offer just more exciting, where banking just becomes a little bit more fun for the customer. And we've kind of shared a little bit in terms of how we're doing it from a savings perspective through the deposits, but also through the spending with the numberless card and the cashback. And there's also a lot of things that we've done just from a general banking perspective, from your account opening process, how we've radically changed that entire process such that even perhaps to our surprise, the fastest customer to open an account was under 3 minutes. And that was something that, again, one of the customers shared in the videos, but also how do you facilitate payments? So lots of little steps that we've done. And if I can end on a last note, is stay tuned. There's still a very rich pipeline of services and features that we're looking to offer to customers, and everyone at Mox is constantly working hard to try and deliver and bring that to customers. So we hope that was a helpful introduction to Mox and to virtual banks in Hong Kong for you, and we wish you all the very best and all the very best to the conference at FinTech Nations. Thank you.
Normal is not enough.
You want more. More freedom. More time. More from your money.
So did we. We wanted speed, simplicity. We wanted control. No delays, no hidden fees, no limitations.
Just life.
We wanted more.
And they called us crazy. So we made it ourselves. Now it's yours when you need it. Today.
Tomorrow. 2 days early. So you can send it, spend it, save it.
Anywhere, anytime, in any currency. With anyone you want.
Whether they're on the other side of the table or the other side of the world. It's that simple.
Do what you want, when you want to. Whatever that is, wherever that takes you. Yeah, maybe we're crazy. Or maybe we just want more. Don't you?
Hi everyone, I'm Deborah Tan Ping, Senior Communications Manager at Revolut Singapore. Today with me, we have Tam Chuang, Head of Growth, and Winnie Tuam, Strategy and Operations Senior Manager, also from Revolut Singapore. Very recently, we launched Revolut Junior in Singapore to very great and enthusiastic success from our customers. So today we would like to spend some time talking to you about the product. So first question, Winnie, Revolut is famous for being a multi-currency travel card and as an FX platform. So we know in Europe, US, and in Australia, it even has cryptocurrency and trading. So does it make sense actually for Revolut to launch a product that's for kids?
Absolutely, Deborah. So Revolut is a financial super app where you can do exactly all those things you mentioned and more in one app. So naturally, we wanted to extend some of these money management tools to kids. And these days, kids are digital natives. So they're exposed to technology from a very young age in all aspects of their lives, from education to entertainment. From a financial perspective, we saw an opportunity to shape children's financial experience digitally in a way that is fun, convenient, and educational. What we've done is that we've designed a product that fits seamlessly into their digital and analog lives. So kids from as young as 7 can benefit from Revolut Junior, which comprises 2 components: a junior app that is linked to their parents' Revolut app, and a physical Revolut Junior debit card for kids to spend in stores and online. The junior app allows kids to view their transactions, save money towards a goal, earn rewards by completing tasks or running errands for their parents. And at the same time, the app keeps the parents notified of their kids' transactions through the parents' own Revolut app. So to summarize, it makes perfect sense to launch a product for kids today. There is a need in the market, and we have the ability to meet this need.
Thank you. So next question. As a mother of 2, Pam, we have heard so many stories of how your children got onto the whole Junior experience. So of all the features in Junior, which one would you say is your favorite and why?
Hi, Deborah. I think my favorite would be, it's really basic. It would be the instant notification. Every time my kiddos buy a snack or a drink. Why? I think these days, most of us work from home, or even if you're in the office, it does break the normal hum of work. And each time, even after close to 1.5, 2 months, I smile when I get the notification where it's customized for my child, like Adria paid $2.60 at 7-Eleven. For me, I think it's quite fun to make out what they buy. Also, in a way, I feel that with the instant notification, it helps me feel connected to my children in the course of their day. And hence, I think this is a very simple, but yet, I would say enriching feature that I feel as a parent to my child.
Well, bringing back to the point about, feeling connected to your children when they use the Revolut Junior card, one of the key value propositions of Junior is also that it is a great tool for parents to use when it comes to imparting good money habits to their children. But Junior, as Winnie and yourself have mentioned earlier, has a card that kids can be given to spend when they're on their own. So it seems like, with that card, kids would be given the free rein to spend money whenever they want, right? How does this, help promote any good money habits at all?
Great question, Deborah. So both my children are younger, age 10 and 12. Neither has a mobile phone. But I think, in terms of, yes, they do have that card and there is a sense of empowerment. I think what is important is that parents can control and give a monthly budget. In this case, I set a $25 budget per month for my children. So even without a mobile phone to their name, they do the math in their mind, and roughly they know how much they spend on snacks each week. So we did a consensus in a typical class of 40, which is a class size here. For children aged 11 and above, almost 85% have a smartphone these days. And the child can see how much they spend per month and hence is able to keep to the budget, which is an important discipline to instill in this day and age.
Thank you. So just before we go into the next question, Revolut Junior has got a whole host of features that our customers can use when it comes to teaching their kids how to manage their money. Maybe Winnie and Pam, you both might want to sort of tell us what are some of the features, maybe starting with Winnie, maybe you can tell us about Task.
Yeah, so Tasks is a really fun feature where the parent can set a task for the child to complete. So for instance, do your homework or set the table, tidy your bedroom. And as and when the parent sets the task, the child will get a notification on their Revolut Junior app that mommy or daddy has given them the task. So when they've completed the task, the parent can then validate that the task has indeed been completed and then mark it as done. Now, as soon as the parent confirms that the task has been completed, then the reward for that particular task will then get transferred automatically into the child's junior account.
And Pam, sometimes you tell us about how your kids and you have this whole co-funding projects like going on, right? So how would you say, the way you get your kids to co-fund certain things like birthday presents might fit into another Revolut Junior features like goals?
So I think Junior, having juniors, I think is really the perfect enabling tool. Because previously, whenever we discuss or I discuss with my child, if they have a birthday party upcoming, we discuss how much they need to co-fund, and I have to take the money, from the piggy bank. But these days, ever since they have junior, it's a very clear enabling tool because it really differentiates with the children what is a want and what is a need. A need will be, for example, the occasional snack or drinks or even lunch, they have outside that they can use the junior card to pay. A want would include maybe the fancy bubble tea drink or like the cited example of co-funding a classmate birthday present or even, a toy that they want to have. So for once, normally what we do is we discuss. And what is interesting and more fun is that these days with junior, I can in front of them, deduct the agreed amount of the junior account so that my child, even at a young age of 10 and 12, understand the concepts of credits and debits transparently. So they know that if they want something, money needs to be taken out of their account, and they need to think twice before they ask for something because they know that they have a stake, and in this case, they need to co-fund a want with mommy and daddy.
Great. And very often people say that a product designed in one region of the world may not necessarily be suitable for customers in another. So Winnie, in your capacity as strategy and operations senior manager, what did Revolut Singapore do to ensure that the product customer fit will still continue to work in Singapore?
Thanks, Debs. So the first thing we did here in Singapore was to ask ourselves these questions. Is there a gap in the market? Does the junior product meet the needs of young people here in Singapore? Is there a competitor offering a similar product? So when we assessed the market and our competitors, we realized that there was indeed an opportunity to raise the bar in terms of the quality of financial services that children currently have access to. We made a couple of observations. So firstly, older teens, 16 and above, they can access e-wallets, but these products are generally not available to younger children. Secondly, there are largely two broad categories of financial services for kids. And these are typically deposit products that, where you tuck your kids' ang-bao money away, or they would be in the form of stored value cards like your EasyLink cards or smart devices that allow them to spend, but only at a short list of select merchants, or that they can spend only in school. So if you think about it, these kids don't really get much control over their own money. Then how will they learn to manage properly if they can't control their money? And this is where Revolut Junior then comes in. So Junior lets kids take control of their finances. It is a place where they can save, where they can spend and learn the value of hard-earned money. So we want to simulate the real world experience as much as possible for the children, but with their safety in mind and where their parents can keep an eye on them, like the way Pam does with her children, when she gets notification on when they spend on sweets, etc. So once we've validated the product market fit, we made sure that the product would meet local regulations. We introduced safety features such as spending limits, transaction monitoring rules, and so on. We even banned some merchants like alcohol shops, tobacco shops, adult shops, and so on. But ultimately, though, the point I'm trying to make here is that there is a common theme of empowerment that transcends geographical boundaries. We want to empower children to build their confidence in financial matters and at the same time build their parents' trust in their ability to look after themselves. And this is such a rewarding journey for both the children and the parents, and something that we want to bring to all Revolut customers, regardless of where they are.
We have time for one last question. So as one of the key people to test and then launch Junior in Singapore, Winnie, what were some of the biggest challenges you met?
I would say that one of the biggest challenges was managing regulatory, customer, and reputational risks. So there are a lot of ethical considerations when you're marketing to or when you're designing a product for kids. And on top of that, there are legal and data protection obligations that we need to meet when we're marketing to children. So we had to take our time to make sure that we covered all angles before we could launch the product. So for example, when we considered the limits that we impose, we needed to make sure that these limits, not only do they safeguard the children, it also prevents abuse of the product. And at the same time, these limits cannot be set so low that they inhibit any sense of empowerment or freedom that we're trying to achieve for the children when they use the product.
Cool. Thank you both for your time today and wonderful insights on Revolut Junior. For those of you who have joined us here, you may find out more about Revolut at revolut.com. Thank you.
Hi everyone, I think it's the 15th time I've been trying to record this video. I hope this one will be the good one. My name is Helen Pozzani-Nilsson. I'm leading the engagement with the startup and fintech community and support partnership for the Nordics and the Baltics at Visa. I have more than 15 years of experience in digital transformation and business expansion in the payments and software as a service industry. I am very pleased and honored to participate in this virtual summit today. So please be ready to listen to my longest selfie video ever without any Snapchat filter. It's exciting to work in this field, especially in the Nordics. The Nordic fintech landscape is a vibrant startup scene and have played a big part in the evolution of the banking experience. However, we recognize at Visa the challenges that the fintechs face when they are trying to take their venture to the next level. So for the fintechs, we act as an enabler of innovation. We allow them to benefit from our global reach, market knowledge, and our expertise within security and regulations. That is how we see ourselves as the champions of fintech. So today, I'll tell you more about how we work, partner, and support fintechs, and how Visa contributes to building the payment ecosystem of tomorrow. I'll also share our view on some key focus areas where fintechs are changing the payments game. So, how an organization like Visa view fintechs? Fintechs, as you know, because you are part of them, are innovating rapidly, and for Visa, it is crucial to support the development of the payment ecosystem. So we support many fintechs at Visa. We partner with some and we invest in few. We are working in partnership with some Europe's most innovative fintechs, including Revolut, Klarna, TransferWise, Vips, Tomorrow, and Mina Technology. We want to offer the most developed solution for consumers, business, and communities. This is the reason why we are joining forces with successful fintechs, because we know that together we can deliver the next generation of payment. So we can briefly talk about the partnership with Vips, for instance. This partnership brings digital wallet capabilities to more banks in Europe, and it is empowering the consumers to send money, pay, and get paid via the mobile wallet. Klarna, our partnership with Klarna, is also another good example. It proves our commitment to partner with a new generation of payment providers to bring secure online commerce to many more consumers. Our global partnership with TransferWise sees the first use case of Visa Cloud Connect, a new way to securely connect to VisaNet through the cloud. Let's move on to the next key question: how Visa is concretely supporting the fintechs. We basically provide instant access to Visa network, the largest and most secure payment network in the world. We also provide our fintech clients or partners with APIs, for instance, to enable new ways of lending or handling transactions, educational programs, resources within consulting and analytics, a dedicated and local fintech team, so talking about my team in the Nordics and the Baltics, and we give access we give the fintechs access to our fast track program. Our fintech fast track program has already helped more than 40 European fintechs to achieve in a very efficient and fast way their goals of providing their customers with better products and services. We believe at Visa in the power of partnerships. Visa scale and know-how makes both parties stronger together. We have also recently launched a new program called FinTech Partner Connect in Europe. It provides basically, it's like a marketplace of fintechs. So it provides to financial institutions, merchants in Europe with a suite of enhanced capabilities, combining Visa capabilities with those of these carefully selected fintech partners. So the subscription management to bank consumer is a good example. That is something that we can offer to some of our big financial institution through Mina technologies. I also wanted to bring to your attention another program that is fintech focused, and the name of this program is Visa Everywhere Initiative. I don't know if you ever heard of it, but this is definitely a great program for you guys, the fintechs. So it's basically it's a global initiative. It's an open innovation program that helps you guys unlock new opportunities. It gives you a global platform to demonstrate your groundbreaking solutions, and the total prices amount to $100K. And this year we are partnering with TechCrush for a worldwide live stream of the final. So it's a great exposure for you guys who wants to expand into new regions and make it to finals. So applications are now open, so don't wait because you can apply until June the 18th for the European region. Moving on to the next subject that I wanted to cover today is how are we driving the evolution of payments. As you probably know, we have many ongoing projects across financial technology sectors, including real-time payments, cross-border payments, open banking, and digital currencies. These are making major contributions to building the payment ecosystem of tomorrow. So this acceleration towards digital payments has become much bigger in recent times, with a growing number of ways to pay and to be paid. So we, consumer, we expect capabilities, user experience, and standards to be available across a wider set of players. So payment must meet buyers and sellers wherever they choose to transact, regardless of the channel and the mode of purchase. So this is why we often say that Visa goal is to act as a network of networks, because we want to connect payers and payees regardless of which payment type and rail they are using. So in practice, it means that we are opening up valuable capabilities of our networks to other payments flow or other players. For example, expertise in the secure authentication of sellers and buyers to prevent fraud, and safe and efficient cross-border payments. In addition to existing cross-border capabilities in the card space, we have expanded our reach to 99% of bank accounts in 88 countries with Visa payments, which is formerly Earthport. So we can now say that Visa is an open network business. We feel we have the responsibility to partner with players that are bringing innovation into the global digital payment networks. That's how the network evolves. So again, the strategic partnership with the Norwegian mobile wallet provider Vipps is a good example. It helps bring their digital wallet capabilities to banks across Europe. So that's a perfect example of our strategy. So what is shaping the next year in FinTech? Whether you realize it or not, FinTech innovation is playing a role in our daily life, especially in the Nordics and the Baltics. Our FinTech clients are developing solutions in areas such as digital banking, wallets, payroll, crypto, and commercial payment solutions. So looking ahead, here's our take on some key categories where FinTechs are changing the payments game, basically. The first area would be probably for us credit space. So credit your way. Many FinTechs start with card debit offering. Now we are seeing interesting trends in credits, and buy now, pay later has become the norm in many markets. Sweden is a good example. Our new APIs are allowing merchants and financial institutions to give Visa cardholders more options for how and when they pay for their purchases, before, during, and after the transaction. Embedded finance. Payments now inside your favorite enterprise software. We see payment volume originating in new verticals, driven, for instance, by software platforms that manage things such as restaurant bookings or gym memberships. We see also Visa credentials embedded into accounts payable platforms like Internet of Things devices, such as cars, electronics, and appliances. Our partnership with Fidesmo in Sweden proves this growing trend. Neobanks. We believe that neobanks are also creating the new community banks. They are increasingly creating digital banking solutions that meet the needs of specific group or communities, including those that have long been underrepresented in the financial sector. The success of Klarna, Rocker, or Luna Bank in the Nordics are good examples of digital banking platforms that are focusing on improving the Nordic consumer financial lives. What about digital currency? The emergence of a vibrant developer ecosystem building on top of the public blockchain networks and stable coins is leading to a new generation of digital wallets and financial services. Many of our fintechs partner or clients are building products that use digital currencies in some capacity. We have been working closely with a digital currency platform like Coinbase, Crypto.com, BlockFi, Fold, or Bitpanda, which have chosen to issue with Visa. Opening up digital wallets, that's another key area, we believe. Around the world, digital wallet adoption is on the rise, along with new generation of platforms such as Airwallex, Goyek, or LinePay. Working with digital wallet providers such as MobilePay in Denmark or Vipps in Norway to embed Visa credentials into third-party payment services is key for us, because we definitely want to deploy interoperable payment system that will benefit consumer, merchants, and wallets. So to conclude, I would say that it's a privilege to serve the companies that are creating these new payment flows and expanding the reach of financial services. We recognize our role to help identify, support, and onboard the next generation of payment innovators who are growing the pie for everyone. So thank you for watching, stay safe, and wash your hands.
So hey everybody, this is FinTech The Real Deal. We have an amazing panel here that I was looking forward to see. I'm having you here on the FinTech Summit and the FinTech Nation Summit. Amazing panelists here. I'm super excited. So maybe we start with a little bit of an introduction. First by the ladies who are here, who are leading amazing initiatives in the FinTech world in their own companies. So why don't we start with you, Jessica?
Hi, Nir. Thanks for having me here. So I'm Jessica Lam. I'm the Chief Strategy Officer of WeLab. We're a leading fintech company in Asia. We've got huge presence in Hong Kong, mainland China, Indonesia. And so one of the really exciting things I want to talk to you about is how do we share our fintech financial services experience to our 47 million users around this Asian region, And most excitingly, I guess, it's with our newly launched 100% fully virtual bank in Hong Kong under WeLab Bank. I'll give you some of the inside scope in terms of what it's really like to operate this exciting digital bank and a fintech company here in this part of the world.
Amazing. Thank you very much. Amanda.
Hi, I'm Amanda. Thanks for having me today. I'm the Senior Manager of Zhongan International in Hong Kong. Our business covers virtual bank and also virtual insurance in Hong Kong. So my key role is to build the ecosystem for different business units in Hong Kong. And I'm also the founding board member of FinTech Association of Hong Kong. So glad to be here today.
Yeah, I'm very, very happy to have you. I was following all your work for a lot of time. By the way, also Jessica. And finally, we can talk and hear the inside information from what's inside. Munshir, how are you?
I'm well, Nir. Thanks for having me. Hi, everyone. I'm the founder and managing director of FinTech Asia. FinTech Asia is a venture builder that works with corporates, scale-ups, and governments on innovation engagement. We help startups in scaling in Asia. We help corporates with engaging with startups, and we work with governments in promoting their ecosystem. We do bespoke research and large-scale events as well. As with Amanda and Jessica, I'm on the board of the FinTech Association of Hong Kong, and very glad to be here with my friend Nir. Thank you.
Yes, and we are in touch on a daily basis on LinkedIn and other platforms, and this is the first time we are having this panel, and it's so cool, all of you, by the way, that you were flexible enough to hop on and come to the summit and share the insights, because a lot of people are watching us and they want to know what's the real deal inside of these cool, hype fintechs and virtual banks. So yeah, I mean, take the conversation and then maybe share with me, because a lot of people are watching these fintechs from the outside and they think everything is cool and hype and amazing, and right? But what's going on inside of these banks when people are getting hired and actually are supposed to deliver inside? Maybe Amanda will start.
All right. I probably would say if you like preparing yourself to come to work for a VB, first of all, you have to be adventurous. At the same time, you have to be very hands-on. That's the thing. I've seen people coming from incumbents or also consultant background that they can sell a lot of their dreams, but at the same time, because we are running a startups, even though that is a bank, right? At the end, it comes to business. So we have to be very hands-on and multitask and be flexible in doing different things at one go. Yeah, I don't know whether Jessica would kind of agree that high-level summary.
Absolutely. I mean, so just to give the audience a little bit of background perspective of where I'm coming from, I've been at WeLab for a better part of 3 years. We're an 8-year-old company. So, it was still a relatively, young budding company when I joined 3 years ago. We've tripled, I think the Hong Kong office has tripled in size since then, but as a group, we're close to about 1,000 employees now. What I would say is, my past life before this was 12 years as an investment banker. So it's a very, very different structured life. And I think the biggest takeaway or the best thing that I did was come in extremely open-minded, right? And almost be prepared to, start from the ground up, which is Amanda said, which is, start and be extremely, extremely hands-on. When I joined, there was no such, the concept of virtual banks or digital banks was, didn't really exist 3 years ago, right? So I think you come in joining a fintech or joining a startup or a growth stage company, expecting that things will pivot and things will change. So what you sign up for day one probably won't be that on day 3, right? And it's okay, because we need to be agile. You got to be flexible. You need to seize the opportunity. And I think when you're in a much more structured organization, for some people, that's not something that they're comfortable with. So it's not a right or wrong. It's a slightly different mindset, and you need to come in with that. So personally for myself, I this is this is I didn't know I'd enjoy wearing t-shirts to work every day, but apparently that's what makes me happy. You know, dropping the suits, dropping the fancy look is actually something that's been actually quite refreshing. But there is a different way, and what I would say is there is fintech from the outside of what you see and everything that Amanda said in terms of, you know, getting all the check the boxes, right? You know, it's a sexy industry, it's a banking, you know, it's something that's fun. I'd pause a little bit and think about what are you really getting into? And let's talk a little bit more, because we can talk a little bit about the hiring process. We can talk about what it is in terms of our day-to-day lives. But in a nutshell, I think a lot of it comes down to, are you prepared to just get down and, you know, roll your sleeves up and, you know, get into the nitty gritty, because you don't have this hierarchy where everyone's doing things for you. So it's a little bit of a reality check, I would say. So I'm just going to pause there, but we can talk back on this in a little bit.
Yes.
Like it's an interesting element, right? We are looking at everybody, all the old banks saying now that, you know, they are technology firms. JPM says that, Goldman says that, you know, BlackRock says that. Everybody wants to say that they are technology firms. So when you look at structured technology firms, it's also about, you know, the mindset. It has to be a cultural change. When you're coming in from places where legacy infrastructure, there's processes that take 3 to 6 months for approvals. That's a whole different ballgame. So when you come in into a startup, you bring in that expertise of your knowledge base and your understanding of the systems, etc., from the financial services perspective. But then it's a different ballgame, and then you got to be on your toes, right? It's a good career switch if you're able to handle it. And I feel that's the most underrated element, is the cultural element, is being able to fit in, being able to change your mindset. It's a very interesting concept called the 100-year life. This is by there's a book by Professor Andrew Scott and Lindy Grattan, right?
Just writing it down.
Right? And this book is a lot about how we are moving towards longevity, right? People are going to live for a long age. Like Hong Kong's average age for women is about 89, and for men is about 85, 86, right? So careers are going from retiring at 60, 65 to potentially working in your 70s. The US president will be 80 during his term, and a lot of senior people are in very important positions globally. So you no longer are looking at a careers that is going to end in your 50s or 60s and you can relax, right, in your early 60s. But mid 40s is probably an inflection point where you change around. So being able to now be very adaptive is going to be very important for people. And it's not just to do with people, of our age with 15, 20 years of experience, but even the young millennials who feel that they are in it and everything is cool and they want to retire at 35, right? It's not likely to happen. So being able to adapt, I think, is going to be a very key element.
Yes. You know,
hey, I'm going to jump in on.
Yeah, sure.
Yeah.
So I really jump in. So I think one thing you talk about age, that's really interesting, right? You know, like 80, you know, is a normal working age, right? As you said, the president's going to be 80 in his term, which was totally uncalled for in the time, right? So as we think about it right now, everyone thinks technology is just for young folks, but it isn't, right? It totally isn't. And that's actually really, really fascinating, right? If you think about it, because there's different types of technology. It's not a one size fits all, right? But everyone just feels that tech is just for the young guns, right? Yeah, interesting if we think about that a little bit more, because I think when we think about digital banks, we always think it's for, millennials, youngsters, etc. And I think, Amanda or someone else could share their views in terms of, are digital banks just for youngsters?
Amazing topic. Let's continue with this, Amanda. Yeah.
Yeah, I think, well, when we first launched our bank business, we kind of, wanted to target the young people, right? But then we find out that's not actually the case, right? When we look at the portfolio of our clients, it's actually come from different age groups. So we have people, who are 80s or 70s, but they are very open in their mindset that they are willing to try on something new. That's very kind of important. And I guess when you wanted to work in a startup or VB, you have to be open-minded, as in, like, if I'm in, say, for example, compliance, would I be only focusing on compliance, or would I be able to actually reach out to kind of helping business or, marketing? This is something that I guess you can't have the experience when you work in incumbents. but in the startups that you'll be able to do it. So I echo what Jessica mentions. It's not right or wrong, but it's more on whether what you wanted to do in your life in that stage of career. So, we have seen people experience that. They like it. They, stay there for a while and then have the career growth. But some people just don't like it, and then they will say, bye. Prefer going back to incumbents.
Yeah.
How's the scene in Israel? I don't want it just to be a moderator. I want you to, give us some insights as well as we're listening. How things in Israel? Similar population to Hong Kong, very similar size, potentially similar per capita income as well, right? But much larger land mass, of course. But how the scene there? How are people reacting? It's always known as this tech nation, Silicon Valley. So what's the situation there? What's the attitude there?
Yes, on the one side, we have great technology. We can also talk about cyber and other stuff, and great AI and great teams and great fintechs and fintech unicorns that we have even today here on this summit. Amazing companies. But yeah, the scene in Israel is very traditional, old, incumbents that haven't been challenged, and that's the problem. So the average Israeli does not feel the innovation within inside the country. Yes, it's changing a little bit. You're seeing that we're starting to talk about open banking and other stuff, and there's a new neobank that is right here on this summit that is starting from Israel, and another neobank by an incumbent. But still, and I like that Jessica mentioned the age thing, and also the quickness that people are moving to start new companies in Israel. So the banking industry hasn't been disrupted in Israel for a lot of time, and then I think I'm the perfect story and case for that, because I consulted to almost all of them already. Most of my knowledge comes from outside of Israel. As you can see, all of these are just some.
Wow.
Maybe you can show the card also that I remember without the digits from the last summit. Yes, this one. So we don't have these in Israel. Munshir, this was your question. We don't have these cool stuff.
So what's the attitude of people, right? So we are speaking about two things here. One is the attitude of people who are looking to come into digital banks and fintechs and technology firms. I've seen a lot of very mature Israeli companies. We had yesterday Israeli showcase here for Hong Kong, and quite a few of them had been around for 5, 10, 15, 20 years, right? But still very much startup mindset. So quite senior folks leading it. On the other side, as you mentioned, there's this traditional legacy that exists. So like we've seen in Hong Kong, we're seeing that in a sense, a generational clash. Are you seeing that in Israel as well when it comes to people, when they move into startups, they face these challenges?
Yeah, I interviewed over 100 CEOs, founders in the last 3 summits that we had. And we also had the FinTech Week focused on Israel and the UAE because of the new peace relations that were formed. And then I got a chance to talk to a lot of them. By the way, a lot of women leadership in FinTech here in Israel. There's a FinTech ladies group that I just love, their vibe. They go all around the world and try to promote and inspire the younger generation to go into these topics and stuff, and they're driving a lot of conversations, and I love their work. I met one person that I don't need to mention the name, but I saw that he came from a poor family in Israel. He moved to Sweden, sold the company for Klarna, and then came back to Israel. And maybe some of the viewers know exactly who I'm talking about. But when I interviewed him, I felt so much eager to change, so much vision. Most of the talk was about the vision that he wants to inspire the kid in Africa, or to have this fintech inclusivity, and amazing. I see so much heart and willingness to. It's come from within. The pain drives the innovation, I think. So this is just one person that I saw that he is young, and he's driving a lot of these young founders in Israel to start their own fintechs and not being afraid to fail. And I love this in the culture.
Yeah, I want to chime in here and say this, which is I think it's great. Some people are natural entrepreneurs, right? So they want to be that founder that's going to drive a movement, right? Or be the person who starts something from the very beginning. But one thing I do want to share with people, which is to be part of that movement and to have impact, you do not need to be the founder, right? Amanda and I have been part of a fintech or a startup or a growth journey with our respective organizations. For myself, 3 years. For Amanda, I believe it's a little bit more than that. You know, from a company's infancy, watching it grow, go through wearing 5, 6, 7 different hats, right? Amanda doesn't just do marketing. She does a lot more than that, right? And I think Mushir knows I wear a lot more hats than just whatever strategy is. So it is about growing as part of that journey. And you can do that as being part of that team with an entrepreneurial mindset without being the founder and the entrepreneur. Because I can tell you, and I've told people this, which is I am not interested to be that founder and entrepreneur. But I am extremely excited to be part of a team and a core to build a lot of new ventures and lead different parts of the team to do that. So I think part of what you're talking about there is there are people who are set to be that leader, right? Or that individual, right? And there are those who can contribute a lot with their strengths and weaknesses in terms of being part of that inspirational team. So as we think about the inside or the outside of fintech, I think there's always this perception, right? Which is that you either got to be the entrepreneur, to run the whole thing, but you don't, right? Because I think we talk about fintech, we talk about startups, we talk about, entrepreneurship. To us, it's all, it's fintech as in the subject matter, but I think what we've been talking a lot more here is actually the whole concept of being part of a growth stage company that's probably going to change and pivot quite more frequently than not, right? Because we're sort of, evolving, disrupting, or what have you. So that's a perspective that I do want to share with the team, because I've seen that in myself, and as I better understand myself, and I've seen that in my peers as well in the market. And it's really exciting in terms of what's ahead.
Rolling up the sleeves and I know, wearing multiple hats. That's fun, right? And I think it's down to being entrepreneurial in some senses, but it's also down to the attitude of your senior managers or the team that is there. In corporate culture, and you both have worked in a corporate world as much as I have, or if not more, you probably have seen that once you're given a task and a role, you have set boundaries, and you're actively told not to cross those boundaries and stick within those. Whereas in an environment very entrepreneurial, where there's a startup ecosystem, you wear multiple hats. You do cross those boundaries because you want to contribute and bring in various perspectives. Like personally, for me, as an entrepreneur, I'm pivoting. I'm doing multiple roles. I'm the head of business development. I'm the head of marketing. I'm the head of sales. I'm the head of ops. Whatever there is, that you end up doing a lot as an entrepreneur. And I guess that's a similar attitude to take when you're getting into the digital banking world from a virtual banks, neobanks perspective. Amanda, thoughts?
I actually have one example that I want to share. I got asked by HR, not with my current company, the previous one, were asking me, whether you would be care if we do not have tea lady in the office. I said, why? And then she said, oh, there's a previous candidate got, like, one of the reasons she left the company is because there's no tea ladies. So I was like, I think, this is a very funny example. It's like, incumbents, you have everyone got everything set for you, right? Like companies with 100 years, they have certain steps or, protocols that you have to follow. But in a startup or even in a VB, I think things are changing so fast that people might not be able to kind of adjust that mindset. So one of the advice that I'll give out is probably think of, like when you come to a VB, do you need a tea lady or you can do it yourself?
What do you enjoy about, being in this environment? And you've been with a couple of mature startups, or as it were, with your previous role. So what's been the thing that you enjoyed the most for both of you?
I guess it's the speed, because I get bored quite easily, right? So I think, things come very fast, that you got new challenge every day. You got to learn new things every day. That's, I think, keep us 24/7 in some sense.
Nice. Even
Yes.
now during COVID, how is it? How is it like working from home, I guess?
Yes, for us, yes. But I guess it doesn't really impact us a lot because we are also doing everything virtual, right? So with your phone and your laptop, you can drive everything. I guess from us that we don't actually see a lot of impact apart from our partners. Their business might be affected a bit, but I mean, we are very lucky that so far we are quite okay.
Jessica, your view?
Yeah, I mean, look, I think working from home or not, I think we all have the physical capability to work from home at this particular point in time. Technology has enabled us to do all of that. From a mindset perspective, the team that we have hired and brought on, they're also very comfortable. I must admit that there was an adjustment period in the very beginning, but that was probably about 11 and a half months ago when the onset of COVID hit, Asia, where my colleagues are in Hong Kong, Indonesia, and mainland China. So that's probably a better part of 11 and a half months ago, just before Chinese New Year, which is coming up, very, 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 very soon. Having said that, I think it's not about can you do it, it's about what do you prefer. And I think when given the choice, a lot of the colleagues actually preferred to be together in the office, right? And part of that is not because we can't work at home. We definitely can, right? But the reason why we actually want to be in the office together is because we actually enjoy each other's company. We genuinely do. And I think that actually says a lot. It's not about ability, it's about preference. Now, obviously, we need to make sure we're safe in terms of what we're doing. But I talk to people, we work with people that you like, and naturally what's going to happen is that you're going to develop stronger chemistry, a more free-flowing conversation. It's more enjoyable, and you'll see that, right? There's going to be smiles. It's a genuine joy and happiness. So I am drinking a little bit of the Kool-Aid here, but I genuinely believe that. And we try to do that within our organization by having what we call a culture book. And we kind of, list out what we believe are the culture values of this organization. And one thing that, I want to share, which is what, Amanda brought up earlier, which is the tea lady, theory. We have one of our culture values, which is it's never not my job, right? So that's part of, Mashir wearing 6 hats as marketing, as operations, as payments, as strategist, etc. But never not my job also means that, it's not very siloed in terms of what we do. I'm not a marketing person, but if push comes to shove or someone just doesn't have capacity, can you step in and help that person? That's one thing. The second thing is also, recently our CFO was picking up trash from the floor because, we were cleaning up and doing different things, right? It's not like, oh, I'm the CFO, I'm not going to do that. It's very much of it's never not my job. And that mentality, I think, flows from all of our, all our team members across the 900 to 1,000 person organization. And it doesn't come overnight, but if you buy into that, then you'll feel a lot more comfortable. And I think that's part of the mindset that we were talking about earlier, right? Which is, can you work at a leaner organization that is a startup or is a FinTech or is a virtual bank? So I think what I would say about a virtual bank is that there's nothing wrong because we're a virtual bank. I think most of what it is, are you able to exist or are you comfortable in working in an environment which is somewhat less structured, and maybe it's a little bit more fluid in terms of the roles and responsibilities, and may or may not be as, how should I say, maybe a little bit more lean in terms of the org structure. And so therefore you may not have a tea lady, right? Or you may have to help and double up and wear another hat. So that to me is sort of the inside look of what it is. And for those who enjoy it and love it, you'll thrive. and you'll be here for 3, 4, 5 years like Amanda and I have. And there's some who try it because it sounds like a great idea from the outside, but once they come in here, they realize, oh, these are the things that I didn't think about and I didn't realize I valued. So all I'm saying is I'm sharing a little bit of the inside, so you come in, so you get a real deal of what's going on, rather than, just checking the boxes from the external perspective and then coming in and realizing, oh, I never thought about that. So think about what you value, what matters to you, before just going for the nice shiny name or title or what have you.
Perfect.
Yeah, and adding to that, it's also we forget the role that senior managers play as effectively role models, right? The fact that the CFO that Jessica mentioned, picking up the trash, is a good example of people not having a chip on the shoulder. And if they can do it, then everybody else's barriers or excuses and chips fall away, right? And this is something that we've seen and we've done as part of the FinTech Association. We've had, when in the early days of the association, one employee, that was me, but largely run by the board and volunteers. After we finish an event, if there is trash, if there's anything else, we had the board members, some of whom were CEOs of banks and heads of consulting divisions, very senior people, doing that because they were committed to the cause. And that's where that attitude from the top is important. One key element I have noticed, I've been part of companies that grow from being small to very large, is that consistency in hiring the managers and ensuring that they have the same philosophy, or promoting from within to maintain the culture. Otherwise, if you grow quickly too soon, so you go from 5 to 50 is still okay, where the CEO knows everybody's name, and then when it goes from 50 to 500, then they may not know their names, but at least the division heads need to be the same as the CEO would be to 50 people, right? So then that culture continues and the attitude continues to build. Otherwise, you just lose track and then you become a few thousand big company and nobody knows each other, and it becomes very structured and very, very, different culture ecosystem that builds up. So I think that's an important element.
Yes.
Yeah, great. That's why we have a culture book, right? Because initially it was easy, as you said, right? It's like everyone knows everyone's name. And then when you realize you're across different markets, right? Geographically, you're across different markets. There are some cultural, nuances, in different markets as well that you need to be aware of. And so to the extent, as much as possible, we try to enhance that through communication. Now, this culture book it's a live document. It's always going to evolve because times change, right? So, for example, video calls was something that was quite novel probably a year and a half ago. Now it's like the norm, right? Every time I tell people Zoom, video is on. A year ago, I think people are like, oh, I'm just going to voice call you. Yeah. So culturally, we're going to have to do that, right? Someone talked to me about a 486 the other day as their first computer. I saw the faces of my colleagues. They had no idea what we were talking about. And then it showed my age, but also, there are times when you do need to keep up with the times and keep upgrading or updating in terms of what is the coolest trend at that point in time. So it is important, and sometimes to communicate and to write it down, as Mushir said. Otherwise, it sticks with the top, or sticks with the select, 10, 20, 30, 50, and you can't scale it to the 500 to 600 to 700 to 1,000 or beyond.
Mm-hmm. Cool. So I think we're coming towards the end. Let's make this a little more exciting, right? So if you had to define 2021 in terms of culture and work to do, what would you define it for yourself and for somebody you're going to work with? Softball. Jess?
That's good, Amanda. She's thinking.
She's thinking.
Nura, kick us off.
Do we have to give a definition or
projection? Word with it. How I see it.
Chaotic, but manageable.
Okay.
I would say, yeah.
Neil?
I think I don't know, in Israel, we improvise a lot. I think, it's important to think creatively, to find out the small, sometimes the whole thing is taking one technology from here, one idea from here, and like mesh it up, you know. So to being, I guess, being flexible also in work, you know, and also listen. Of course, it applies to every year, not just this year, but just listen and learn. You know, I think also these fintechs in Israel, certainly when now they're building new neobanks, they need to listen to this panel over here and these virtual banks and see what's out there in the world. Not everything you need to reinvent. Sometimes if you listen and if you learn, you can learn a lot.
Yes.
I feel that this is the year where action's actually going to take place. So 2020 was a lot of wait and see because there's just way too much uncertainty out there. In a way, for those who are waiting and seeing, I think there was actually a lot of aha moments as well, which is working, this is working. You know, people talk about being quarantined at home and you learn about yourself, relationships, etc. There's also a huge focus, I think, on mental health and really getting things in order. You know, what really matters, what doesn't matter, what are the things that you can live without and what you can live without. So I feel that 2020 was a lot about just working things out. And 2021, you've either accepted that this is the new normal and it's not going to be, you know, airports aren't opening up tomorrow, right? As much as you want them to. And even when it does, it's going to come with restrictions and what have you. So I think this is the year where we're starting people to actually take action on the ideas that they've had. It's kind of a now or never kind of period. So I think it's really exciting to see that we will get some really out of the box ideas for people who are taking that chance to do it. And for those who've worked out that this isn't it for me, I also feel like it's their sort of awakening moment that this is where I'm comfortable and this is exactly what I want to do, whether that's talking about a career shift, you know, whether that is taking the plunge and trying something different, like, you know, do I like digital banks? Do I want virtual banks? Am I willing to try e-commerce for the first time in my life, etc. So I feel that this is the year that the change is actually going to happen. Whereas 2020 was people like, let's start thinking about it. I think I need to do more digitalization. I think we need to get more consultants, but not really pulling the plug. I feel that this year is where a lot of that action will actually take place. And definitely in sort of like late second quarter, Q3, there will be a lot happening, whether it's in Asia, whether it's in, you know, Europe or the US, definitely seeing the momentum for that.
Right. For me, I think it's a lot about. I keep saying I've been pivoting so much. I feel like a fintech ballerina, right? I feel that moment of pivoting is maybe it's going to be lesser pivots. It's going to be moving a little slower. It's almost like a significantly large play in your life where you've been pivoting a lot, and now you'll go into Act 3, which is going to be more serious, more focused. And I think I agree with Jessica. There's probably for a lot of us, the chaos may start becoming more normal or manageable, and now you got to get a little more focus and put in a depth. Right, the next 2-3 years will be defining for many people's careers, and that's probably where I see that for everybody as well. So yeah, thanks again, Neil, for having us on this wonderful panel. I'll leave you to close the panel for all of us.
Yes, thank you. I mean, all of you are people I love to listen. I've been watching you in other summits and webinars. I've been learning and studying every move of these virtual banks, and just like, you know, this is my passion, and this is why we have the FinTech Nation Summit, to learn from all the best nations, the best practices. And actually, as I said before, the idea for the FinTech Nation Summit came to me because of the finance minister of the Netherlands. He said that the Netherlands should be a FinTech nation, and they should connect to other FinTech bridges, like Hong Kong, like Singapore, like Israel. So that's why we have these summits and these conversations, to welcome new people into the FinTech world and learn from each other, from the best practices. And I'm super thankful for all of you and your time. And I just want to continue with this. Maybe we're going to make another panel and share some other lessons because this is fascinating, and this is our role, I think, in the industry, to open up to others and include as many as we can. And you know, not, you know, sometimes it can be in places in Africa that it takes 4 days for the KYC, you know, and other places. I mean, the fintech world, or the fintech nation world, is big enough to include everybody. And thank you very, very much for this wonderful panel.
Thank you. Thank you for having us.
Thanks for having us.
To learn more about what's happening in Israel, happy to be part of this.
Okay, so we are scheduling you, and people are watching us, feel free to connect. We're going to share your data, LinkedIn, whatever you, where's the best place to learn about you? Just give us your favorite social network so people here who are watching us live right now would know.
I think it's going to be LinkedIn for me.
Yeah, LinkedIn for me.
Great. LinkedIn for me as well. All right. Thank you, and see you soon.
All right. Thanks.
Bye. Take care.
Hi everyone at FinTech Nations. My name is Benjamin Quinlan and I am the CEO and Managing Partner of Quinlan and Associates, a strategic consultancy specializing in the financial services. I'm also the chairman of the FinTech Association of Hong Kong. Now, when I got asked by FinTech Nations to speak at this event, I was trying to work out what is the topic that many people are interested in, but probably doesn't get enough airtime today. And I came up with the topic of talent. Truth be told, a few months ago, my firm actually wrote a report looking at the challenge of talent that many fintechs were facing all around the world. And I'm not just talking with the early stage companies, I'm talking with some later growth stage companies, including some of the largest unicorns. And we actually, after doing our research, found there was a bit of a problem. So as a result of that, I'm going to present some of the insights from our report called The Human Factor. I hope you find it interesting, and I hope you find maybe it's something that resonates with you in your current line of work today. Now, if I move to the presentation, we want to start with just a quick overview of some of the problems that many of the fintechs were facing, and that related to the trouble, unfortunately, that they were getting into, particularly as they started to expand here in Asia. Now, the first slide that I'm pulling up is really around some of the employment regulations within Asia Pacific for the various countries, and they apply to different things like your compensation, discrimination, working hours, and you can see some of them here. For example, Hong Kong has a minimum wage law, albeit not the highest. Compensation in terms of clarification of provident fund calculation in India. In Singapore, you need to go through what is called responsible retrenchment. So calculations on retrenchment benefits and so on. In China, protection for women's employment rights. And I can go on and on and on. And the reason why I'm bringing this up, some of you may think, well, this isn't that interesting, right? But the reality is, from a penalty perspective, and if you get this wrong, the consequences can be quite severe. And I'm not just talking in terms of financial penalties, there's actually imprisonment involved in a lot of these jurisdictions if you fundamentally get it wrong. The reason why this really came to my mind is actually a couple of the unicorns that were expanding around the region were getting into trouble with the Singapore Ministry of Manpower. There were quite a few articles on it written by the Financial Times and various other publications that employment visas were actually getting revoked, and companies were wholesale being asked to just stop their operations because they were hiring far too many expatriates and foreign workers at the expense of providing job opportunities to local Singaporeans. And just something as simple as that a company is not paying attention to landed them in such hot water that they had to fundamentally rethink, well, do we need to get our HR strategy really up and running and in place, because it's causing us many more problems than we care to have. Now, I think beyond just the regulatory aspect, we wanted to actually look at how do people feel about working at the fintechs? Because since I've been in this industry, I have seen so many employees come and go from different fintech organizations. And when they were leaving, it wasn't really a pull factor from another fintech. It was actually they were very unhappy with their current jobs. So we literally just went to something like Glassdoor. And you can see here, this is the Glassdoor ratings from employees who had worked at the Hong Kong virtual banks. And this is the Glassdoor ratings from employees who had worked at the traditional brick and mortar retails. And automatically, you can see a big divergence in satisfaction from a 2.9 average rating with the VBs to a 3.8 with the global retail banks, as low as 2 stars out of 5. And some of the issues coming through with employees at virtual banks, it was pretty consistent. So a lot of negative sentiment centering around poorly planned and executed HR processes, not knowing what their specific job was, having to double, triple hat. Now, many of you will say, well, that's part of being in a fintech. I agree, but as you become a more mature organization, and especially our recruiting young talent from the market, many of the individuals will expect, I hope I have a bit more structure around where my career is going to go. And obviously, if you work at a big global bank, you have that structure in place. Unfortunately, many of the large fintech organizations don't even have that in place. So people feel often quite lost in their careers. And as a result of that, that can severely impact the satisfaction they have when they hit the desk every single day. Beyond that, I actually have a lot of friends in the industry that were leaving. I spoke with global recruitment firms that said they were seeing exactly the same thing. People were very unhappy. They were working really long, late hours to meet the expectations of customers, investors, but all at the expense of the actual workforce internally. So something we found really, really interesting. But beyond obviously just showing you this, why does this actually matter? Because it genuinely results in high levels of employee turnover. You can see in the figure on the right-hand side, the average turnover rates at large fintechs, and this number we did not pull out of the air. It's actually anonymized data from some of our projects, as well as speaking with many of the people who work at some of the larger unicorns here in Asia. And we found that these rates were actually about 20% per annum in terms of employee turnover. Some of the people I was speaking at said it's actually substantially higher. Now, if you compare that to like a retail bank or even just a large scale tech company, these turnover rates are closer to about 12 or 13%. So there is a marked difference. And why does this actually matter? Because when you look at the bar chart on the left, you'll see that there is actually a hidden cost, but yet a very tangible one when people leave an organization to such a great degree. And you can see some of these line items. You'll basically have a period, particularly if they're a revenue generator, of lost revenue. You need to bring on a new person. There's a headhunting fee involved. There's usually a new hire salary premium. There's a fixed onboarding cost for every single person that you bring in the door. And you have to take into account that that particular individual will not be operating at full flight for maybe the first few months. So there is a period of underperformance. Now, this is all real data based on some larger fintech companies. If you net off even the base salary savings that you may receive from that old employee leaving, your net real replacement cost comes out for some of these larger firms at about $44,000 per individual. Now, why does that matter? Because if you translate that to the incremental additional turnover that they are experiencing vis-a-vis a traditional brick and mortar incumbent, you can see on the bottom right-hand table, the additional incremental cost per 1,000 employees starts to creep up to the $3.5 million range. And if you've got a really large fintech with thousands of employees, like a 5,000 firm fintech, this is looking at about $17 million per annum. Even if you're a small firm, employee churn to such a high degree costs money. And just because it doesn't show up on an income statement as a specific P&L line item, it doesn't mean it's not there. So there's actually a real financial consequence to people not being happy working in an organization. And for us, we found it fascinating because for all the glitz and glam and impression that many fintechs give to an external audience, we found the realities working in the organization were not quite the same. So how do you get this all right? And it really revolves around having the right people strategy, the right HR planning in place. And in order to do this in the right way, we've laid out what we call a 4-step process here. And that's from having the right growth strategy, which ties into workforce planning, which then necessitates the correct HR team setup, which you then need a robust HR operating model to support. The funny thing is, if you look at something like step 2, the amount of times where I speak to people and the lonesome HR individual that says, I need to do workforce planning for the year ahead, but they have no idea what the actual growth strategy of the company is. Companies must fundamentally map out a robust strategy for how they are going to scale in years to come. And only then will we be able to determine what workforce is needed to support that growth. Once you've mapped out the workforce, then it's about, well, what HR team do we need to set up to make sure that it works? And ultimately, what's the HR operating model to streamline this whole process? So right from strategy development on the top to strategy implementation in steps 3 and 4. When you go to something like corporate strategy development, very important, we are a strategic consultancy. So at the end of the day, we always talk to our clients about strategy. Strategy is about how to play, where to play, how to do it, right? And it's really, if you want to break strategy down in its most simple way, there's just 3 questions that every organization should be asking, which is, where are we now? Where do we want to be? And how do we get there? And the where are we now, there's a lot of homework that you need to do around what's happening in the industry with your competition. Where are the objective best opportunities? Where are those pots of gold going to be? When you've done that, you also have to have a realistic view internally with management and with your team about what are we good at, what are our capabilities, and what are our constraints? Because there's no point of saying there's X amount of money to be made doing this if you know you can't do it. And only when you match the external opportunities with the internal capacity can you start to develop a strategy that is fit for purpose, which is step 3. When that's done, you need to understand what is your operating model to make it work, and then move on to effective implementation planning to see it through to execution. And you can see within step 4, the operating model development, that includes your people, org, your operations processes, risk compliance, data infrastructure. And it's really that people organization part, which is often overlooked by many companies, which was the purpose of us going into this report, the operating model around human resources. One of the first things that all companies should be doing is having a bit of introspection around what their talent strategy is. And this is it's not just about how to attract talent, but it's also about how to retain talent. And that's a very important part of the workforce planning exercise, right? So you should, as a firm, be looking at your talent pipeline. What are the skills you require? What's the messaging around your cultural ethos? What other things are you doing to really draw people into the organization? One of the things that we all like to see as well is a remuneration philosophy. So ranks and promotions, salary bands, benefits, employee share options, right? These are all things that can come into it. And if I go to so many fintechs, you'll often find that they don't have a clear remuneration philosophy. I could say, well, what are your bands? What are your rankings? And how do people get paid at each level? Many people honestly wing it. And it's about a personal preference, or, you did well, so as a result of that, we'll reward you with more. And while that might work for founders, it doesn't often work for employees, because they need to see, particularly juniors, a lot more structure around how they are going to develop throughout the course of the growth of your organization. And then finally, L&D frameworks, right? Things like your internal mobility, further education, high potential programs, and even external corporate training. Many people understand that when you work in a startup environment, you are learning on the job. And for me, I often find that the best way to learn. But even apart from that, there are many benefits to actually having some formal learning and development policies and practices in place to help nurture and upskill your employees as they continue to grow with you as an organization. I spoke about the HR team setup, so very important. And I often find many fintechs, even the largest ones, literally having 1, maybe 2 HR people to manage the expansion of the company throughout hundreds, if not thousands of hires. The reality is it's not realistic. Once you understand just how much your company is going to scale, what HR functions do you need to support it? And of course, you don't need all of them. Is it a business partner? Is it someone in recruitment? Does someone need to manage compensation and payroll and benefits? Is there an operations person? Is there a diversity and inclusion head which champions that cause? Within that, the responsibilities need to be very, very clear. Again, even within HR functions, I see HR reps triple, quadruple hatting over their roles that they often get confused, which is exactly why this has become a problem for so many growth and late stage firms. Organizational structure is critical. Where do they sit within the organizational construct? Who are they reporting into? And finally, when you've determined all that, you can work out what is the appropriate budget to allocate to make this team work. The reality is HR teams are important if they're there and designed to support a very aggressive growth plan for a fintech firm, of which many companies out there are trying to scale aggressively. So it's important not to overlook the people aspect of the business. And then when we talk about, I guess, the broader employee life cycle, we like to think of it as a journey for every employee, right? If you look at a company, you're there to, and we go across this value chain, source the right people. How do you filter them through interviews? From a contract perspective, how do you ensure your job offers are streamlined and in place? The whole onboarding process, development, very important, from work performance and rewards, and then even right through to offboarding. How do you ensure an effective exit of your employees? And across all of this, those are the three things that I mentioned: policies, processes, and systems, which we call PP&S. So policies is really ensuring your employees understand the company's rules and regulations around their obligations and behaviors. So this is things like your anti-discrimination, fair employment requirements, making sure people actually can take their statutory leave entitlements. This is very, very important. A lot of this is enshrined in an employee handbook that many of you would see if you have worked with a large corporate. But there's no point of having a handbook or any of these policies if they don't live and breathe. And that is why having processes is in place. Make sure that all of these policies are effectively applied in a structured manner. And that helps to drive productivity and minimize risks. So let's go through some of these examples. So standardized job descriptions, a clear idea on your salary bandings, criteria to evaluate candidates. Even when you're going through interviews, you often find that people are basing it 100% on personal feeling, which at the end of the day, you can't avoid. But is there objective criteria from which to assess new candidates? The contracts that are going out, are they standardized yet customizable? The onboarding process, how do you vet them? What are the new joiner obligations, such as setting up insurance or retirement schemes? Giving them system access, even basic things like this are often overlooked. Developing employees. So again, very critical. What is the annual appraisal process? While you as a founder might feel it's a casual conversation, for employees, they take it very differently. So how am I benchmarked? How am I promoted? What are the ranks of promotions I can go through? Everyone in their nature likes to see progress. So it's very important you don't lose sight of the progress of your organization just because you're missing out on the progress of the people that help the organization become what it is. And then the offboarding part is, even before you get there, are there employee improvement plans? Are there escalation protocols for misconduct? And then, do you do exit interviews and checklists and so on? Now, the final thing along the bottom is you need to thread this all together. It sounds like a lot of paperwork, a lot of headache, a lot of work, and it can be, because many of these things can be manual in nature. So it's important to the greatest extent possible for these tasks that can be automated to try and automate them. And that way you can really drive productivity of the HR process and you can minimize the chance of human error. This is just a very, very quick example of a mix of a policy and process around hiring in Singapore. I gave you the example at the start of this presentation that companies have been in trouble with the Ministry of Manpower around hiring too many foreign workers. So even if you go through and you understand you want to do an application for a foreign worker, one of the most important things in Singapore legislation is you actually have to advertise the role at a minimum for 14 days at mycareersfuture.sg to give local Singaporeans a chance to actually apply for that role. It seems like something basic, but unless you have an actual structure or system in place and processes to make sure this is done every single time, many of these things can be overlooked. So very important to go through and think about this holistically across your organization as you continue to scale. The big firms do it, and that is why many of us who have worked in these organizations might find some things a bit tedious at times, but at the end of the day, the checklists are done and there's a lot more structure around the career path and career growth. And particularly as many of the fintechs are looking to scale and grow, having these kinds of processes, policies, and systems in place are very much well advised. Now, I obviously can't go through the whole presentation in so much detail today, but if you would like to find out more, you can always go and read the human factor on the Quinlan & Associates website at quinlanassociates.com under our Insights page. And if you have any inquiries about the report or some of the work that we do in this space, feel free to email us at inquiries@quinlanandassociates.com. Well, I hope you enjoyed the presentation today, and I thank you very much for your time and patience in listening to me. Enjoy the rest of your sessions at FinTech Nations, and I personally hope to see many of you sometime in the near future, either working with you or collaborating with you in some way, shape, or form. Thank you very much, and have a good rest of the day ahead.
Hi everyone, my name is Shireen and I'm here speaking to you from the DIFC FinTech Hive, which is actually the largest FinTech hub in the Middle East. We have 4 main propositions that I'd like to talk you through today. First and foremost, we run accelerator programs that are intended to bring the FinTech ecosystem together. We were actually launched as an accelerator program back in 2017. Now, this accelerator program is for FinTechs, RegTechs, Islamic FinTechs, as well as InsurTech companies. We have so far accelerated 4 cycles of this program. And since 2017, our programs have become so popular that we actually now have multiple programs, including an early stage program with Startup Bootcamp and a scale-up program where we work with the VCs in the ecosystem in order to give further capital injection in companies raising Series A and beyond. Now, over the last few years, we're proud to have accelerated more than 100 FinTech startups. And more importantly, because our accelerator program model working with the banks in the region, we're proud to announce that we've worked with over 74, together with the FinTech startups, developed over 75 POCs. Now, speaking of the corporate partners and the banks, corporate innovation is actually another pillar that here at FinTech Hive we strive to build. We work with corporations, government entities alike in order to manage all areas of innovation, whether it's something as simple as a couple of day hackathon to something a little bit more complex, like building an open innovation framework for their internal hubs. Now, we work with over 60 partner institutions and counting. When we're not busy running programs, the space that you see behind me actually is a functional co-working space as well. Us being a part of the DIFC, which is a leading financial center globally, we have over 270 fintechs licensed and operating out of here. The DIFC also has its own independent regulator, so we're able to provide licensing for fintechs that deal in financial markets. And our regulator also provides a regulatory sandbox where it has successfully seen companies enter as well as graduate from. Now, alongside our programs, corporate innovation, and co-working space, we also run a very vibrant community. Now, COVID aside, we tend to run events, and over the last year, these have migrated to the format we're speaking on right now, which is virtual. We run a dedicated women's program that is all about women empowerment in the financial industry called Accelerate Her. And we have a community of over 5,000 people engaging with us. Now, that being said, we also try to, as much as possible, build bridges between Dubai as the hub of MENA, along with other hubs around the world. And we have something called a Global FinTech Accelerator Network, where we connect with other FinTech hubs and associations from all around the world, from the US to Europe, to Africa, and elsewhere in Asia. Thank you very much to everyone attending this event. FinTech Hive does continuously scout for the best and brightest FinTech startups. So if any of you out there are aspiring FinTech entrepreneurs, please feel free to visit our website or get in touch. I'd be more than happy to speak to you.
And also as part of the conversation, I wanted to explain a little bit about what the private investment group is and also what we do. So I'm the Director of Business Development at the Private Investment Group. We're an Abu Dhabi and Dubai-based company. Our focus really is aligning with the government and the private sector here in terms of we really look for international companies, people, may you be big or small, that want to explore this market. May you be looking for distribution, licensing, joint ventures, or investment. For us, we've really been a strong gateway into the region for a couple of years now. And we were built for that exact purpose because it's a new market, it's moving fast, it's aggressive. And in terms of shapes and sizes, I don't think it matters who you are or where you've come from or what products you really have in your pocket. The private investment group has really built itself to handle most situations. And I guess specifically looking at financial technologies, we've taken some of the most successful financial technology companies as well as startup financial technology companies, and we've put them into Abu Dhabi global markets. We've put them into other large government infrastructure. I think we now have Abu Dhabi Pay, which is a new payments gateway being built current in Abu Dhabi. And also we have DIFC, DMCC, and then we also have a lot of second generation families here who are looking for growth stage businesses that have product that is working in a different environment, regulatory or banking, insurance, and they're looking to get behind that. For us, we don't have, as I said, we don't really have growth stage businesses here to be able to invest in. So that's why we look at markets like Asia, Europe, US. But as I said, for the private investment group, we really focus on bringing that knowledge back into the region. And how we do that is really by explaining what we have here, what a lot of the government as well as the private sector can give back. And also we have to really identify who and what are the right types of industries that need to be adopted here. So realistically, in terms of the private investment group, we're quite excited because we're like a giant, let's say, government and private sector recruitment agency. Well, don't quote me on that. We're not a recruitment agency, but we have an exciting job of really looking into other markets, meeting with new people every day, and really identifying their current needs of what they need out of this market, and then really facilitating what they look to achieve. May that be investment, as I said, a joint venture, a distribution contract with the government, a licensing partner, you name it. I mean, we have a strong track record of doing that, and we would happily
help any business that really comes our way. So hopefully that gives you an overview of who we are and what we do at the Private Investment Group.
Hi there. Delighted to be part of this event. My name is Alistair Little. I am founder and CEO of the Private Investment Group. The Private Investment Group, just a little background, is a Dubai-based investment company working very closely with a number of key investment stakeholders around the GCC. We work with public sector funds, semi-government funds, as well as then the private sector, private wealth, and many of the families in the GCC states. Obviously here in the UAE, Saudi Arabia, Qatar, Bahrain, Oman, and Kuwait. For us, it's fintech as a subject is very much a leading part of the mandates that we receive on a regular basis. If you look at the UAE specifically, it has a 24% coverage, market coverage, when it comes to where these fintech companies are choosing to base themselves, or where many of them are incubated, supported. Many of the countries, Bahrain, Saudi, are incredible places to do business and to grow and expand a company, especially in the fintech space. I would say, being based in the UAE and spending a lot of time in Dubai and Abu Dhabi, it's quite an incredible place, to be honest, to becoming, whether you are a startup in the fintech space. You have incredible initiatives from the government, such as Dubai Future Foundation, Dubai Future District, which I strongly encourage anyone to look into. And obviously down in Abu Dhabi, you have Hub 71, which is funded by Mubadala. This is one of the sovereign wealth funds based in Abu Dhabi. And these really provide incredible support for fintech businesses that are either looking to get some of that seed capital in, get that support, also have guidance. I think this is one of the key areas where the UAE specifically really flourishes in as far as its open door policies. So many times, if you're in London and creating product from scratch, often you maybe have to fill in some of the gaps as to what's going to be actually required by the bank that might plug this in to be an end user, what's going to be used by another financial institution. Here, those dialogues are quite easy and free to have. So you can really build out and tweak your product or your service based off end user information. It's great to do market research. It's even better to be able to engage your potential end user to build the product that they actually want. And I think this part of the world is incredibly good at engaging in that dialogue and having that ability to discuss openly. Obviously, the wider MENA region, looking slightly beyond to Middle East, North Africa, there is a massive percentage. It's about banking the unbanked, and the unbanked, can be an issue in the wider MENA region. So, fintech as a sector is, as I said at the beginning, is a real focus, and incredible opportunities from a commercial aspect, but also from an ethical standpoint. We all should have the right to be able to control our money, to be able to purchase, sell, trade, and banking is an incredibly important part of that. So, yeah, from our perspective, the fintech sector here is not just important from a transactional perspective; it's important from a infrastructural standpoint. I think when you also look at the economic free zones, in terms of what they offer, businesses coming in, here in Dubai, you have Dubai International Financial Center, DIFC, and obviously down in Abu Dhabi, ADGM, Abu Dhabi Global Markets, both based on international common law, both 100% foreign ownership, incredibly fluid setup, relatively inexpensive, and again providing that wider support structure from a licensing perspective. Obviously, when it comes to raising capital from this part of the world, so the following comments relate to all sectors really as a whole, but looking specifically at the financial technologies that are looking to come in, especially if they're in the growth stage, it's very important to understand your value add to the region. Anyone that knows me knows that value add probably leave my mouth once every 30 seconds, but it's really just because it's probably the single most important factor when it comes to getting strategic partnerships, joint ventures, raising capital, to really understand what value that's going to bring here. How's that going to benefit the end user? What's here already? Really doing your market research and looking at what problem this is going to fix. The economy here has been moving away from an oil-based economy for quite a long time, longer than I think people realize. They're cash positive in terms of deployments last year in the region, 27 billion, which was a record year during COVID, which is admirable and to be applauded. So I think when you're especially in a growth stage, as a fintech, it's very, very important to look at what you're going to bring here, having your MENA HQ, putting down roots, plugging into the ecosystems that exist. There's a tremendous amount of support that you can get. So yeah, come here and start to learn and start to see what's actually happening. From the private investment group standpoint, our goal is to bring value again back to our investment partners, whether that be a family, whether that be a fund, whether government or private. It's really to make sure that the types of fintech companies they're looking for, which can alter. Some are looking for early stage, some are looking for growth, some are looking for Series B, Series C. There is a home for everyone. It's really just making sure that you're fully prepared. Some of the work that we do is really helping people to understand how protocols, ways that things work in this part of the world, because it's wonderful, it's unique, it's multicultural, it's highly international, but like anywhere, has its ways of operating. So coming here with an open mind is incredibly important. For me personally, speaking as Alistair rather than just the parent investment group, we see the growth of companies such as Revolut, and what they've done and their ability to scale, and that's just sort of the tip of the iceberg, really, in my personal belief. A lot of the powers that be in this part of the world are looking to heavily upgrade the banking sector, looking to heavily upgrade in consumer finance, and how individuals and how end users can provide or have a safer, smoother, more effective platform in which to manage their own money or their business money. So it's I see a sustained growth throughout this year, so it's a good time to be coming to this part of the world. It's a good time to be having those discussions and conversations, and I think 2021 will be an incredible year for financial technology, as a whole. I think my final point would be, when you're here, it's really coming with the aim and the target of understanding where you can bring innovation, understand where you can bring your own original impactful ideas, because you've got an incredible open-mindedness here that will welcome that innovation, welcome that vision, but making sure that you're very, very clear on what that is and how you'd like to achieve it. And you will find an incredible amount of support and also capital that is ready to be deployed, regardless of what stage you're at. So, I wish everyone the best of luck. If you're a startup watching this great event, or maybe you're just sat there and you have an idea, maybe you haven't started yet. Just read, do as much reading, learn, absorb as much as you can about this part of the world and other parts as well, of course. But really do as much research as you possibly can. Don't overcomplicate something that doesn't need to be overcomplicated. Part of when you look at the UI UX, perspective, if you're talking about some sort of fintech that engages with apps, customers want it to be simple. We all want it to be simple. So, look at those problems in banking or payments or remittance or payment gateways, payment processing. Look at where the gaps are. Every country, every zone, every continent has its gaps, has its issues, and I'm sure that some of you watching have the solution. And please always feel free to reach out to me or any of the team. If you want any insights or any thoughts, and if you're looking to come to the region to look for partnerships or to try and approach capital, we're always here to help. So again, thank you very much indeed. It's always a pleasure engaging with the team, and everyone stay safe, and looking forward to a very positive year ahead for everyone. Thank you.
Distinguished guests, ladies and gentlemen, I am pleased to address you all during the landmark FinTech Hackathon, a highly influential event that effectively highlights and provides valuable growth opportunities for emerging talent in the FinTech sector. We're joined today by some of the world's leading FinTech drivers, such as Microsoft and Invest Hong Kong, among many others, as we look to champion the next generation of FinTech stars. The aim of my address is to shine a light on the elements of the region's thriving FinTech landscape and convey how the Emirate of Abu Dhabi has integrated financial innovation into the very fabric of its national growth strategy. But first, the rise of FinTech in the region could not have been made possible without the provision of a robust ecosystem, one that enables innovation and progress from banking and financial services to logistics and aviation. The business world has recently turned its focus on ecosystems and how to build and maintain them. Essentially, to the scientist, an ecosystem is a highly interconnected, closed system in which life can thrive. Furthermore, scientists have identified the 5 key enablers an ecosystem must contain to survive: energy, minerals, water, oxygen, and living things. The functionalities of fintech ecosystems find natural parallels to that of a biological ecosystems, including energy, the force that powers everything and keeps it going. The equivalent in our fintech ecosystem is ambition, the desire to grow the sector, and the will to make the decisions that allow it to flourish. In Abu Dhabi's context, this is derived from the policies of the government, both federal and local, and the strategic vision of the wise leadership. Then there are the minerals. Here I'd say that's the technical aspect, the solid regulatory and legislative framework, as well as the rules and regulations that are the foundation of a strong, high-growth business environment. In this field, Abu Dhabi really shines with ADGM. In our capacity as the Emirates International Financial Center, being the crown jewel since its inception 5 years ago, one of ADGM's core priorities has been supporting fintech firms and adopting fintech initiatives. A prime example of this effort is ADGM's Digital Lab, a regulatory sandbox that's a first of its kind for the MENA region and the world's first digital version. The program attracts international, regional, and local participants to innovate and create progressive solutions under the supervision of ADGM. For water, we're looking at the essential business services needed to thrive. Banks, accountants, lawyers, auditors, even office space fall into this category. Again, ADGM has worked hard on offering a one-stop shop for fintech startups where they can operate under special licenses and utilize the services of both ADGM entities and a host of global service providers able to operate under ADGM's jurisdiction. This complements Abu Dhabi's advanced business environment, which is home to some of the region's best-known banks and regional headquarters of multinational financial service companies. Oxygen can only be money, or to be more accurate, investment. And here is another area where Abu Dhabi is at an advantage. The Emirate and ADGM are home to a series of investment initiatives aimed at supporting the regional startup ecosystem. For most of these initiatives is the homegrown Hub 71 Accelerator Program, supported by Mubadala, Microsoft, SoftBank, Abu Dhabi Investment Office, and situated in ADGM. In addition to this, in 2019, Mubadala has launched Abu Dhabi Catalyst Partners, a $1 billion fund that is based in ADGM and aimed at positively impacting the Emirates financial ecosystem through generating sustainable returns. Abu Dhabi in particular has made fintech a priority in terms of supporting and implementing fintech solutions to create efficiencies in the public and private sectors, and by establishing a holistic fintech ecosystem where startups and established players alike can thrive and prosper. The growth potential for the cities that establish themselves as fintech hubs is significant. The global fintech market is anticipated to grow around 20% each year over the next 5 years and reach a market value of around $305 billion by 2025. Not only that, the World Economic Forum estimates that 60% of global GDP will be digitized by 2022, with growth in every industry driven by digitally enhanced offering. As it makes its play in the space, Abu Dhabi has significant advantages over more established fintech counterparts. Its strategic location and advanced infrastructure make it an ideal base for companies targeting emerging markets in Africa and Asia, where mobile payments and tech-enabled microfinance solutions are bringing financial services to hundreds of millions of previously unbanked people, as well as supporting sophisticated new businesses. At ADGM, we aim to act as a key enabler of Abu Dhabi's ambitions of developing a world-class fintech ecosystem that attracts the world's foremost incumbents and insurgents to its quarters. ADGM is uniquely placed for a number of reasons, but mainly because it provides an independent, well-governed jurisdiction based on internationally recognized English common law, with a track record in supporting global transactions for enterprises that want to do business from and with the region. Regardless of an enterprise size, geographic focus, or economic sector, ADGM is working to ensure that tailor-made licenses, registration packages, and support are available to fit every need, promoting investor choice and ensuring marketplace liquidity across all horizontals and verticals. For tech founders in particular, ADGM provides several end-to-end entrepreneurship offerings, including its Tech Startup License, which is designed in collaboration with strategic partners to deliver a one-stop shop solution for innovative companies. ADGM and Abu Dhabi leaders are aware that the fintech space is going to remain highly competitive for many years to come, and even with the strong foundation now in place, there is still a lot to do in our commitment to establish Abu Dhabi in the top tier of global fintech hubs. Yet, the Emirates' track record in setting out and achieving ambitious targets and supporting the key industries that help it diversify its economy away from hydrocarbons surely make it the key emerging fintech player to watch over the next few years. Thank you.
Hi, everyone. Thank you all for having me today. My name's Carmen James from the Abu Dhabi Investment Office. I lead our financial services and ICT sectors in foreign direct investment. And today I'll be talking to you about white space. So the huge regional expansion opportunities that are available to fintech firms, why you should consider Abu Dhabi as the landing pad to take your business to the next level, and how ADIO can really help you accelerate that growth and truly take off. So innovation is really at the core of the United Arab Emirates, and in particular, Abu Dhabi's DNA. We were built on executing big visions. The UAE is blessed with great leadership, and one of Abu Dhabi's greatest strengths is that continued vision and stability. So the ability for the late Sheikh Zayed to think 50 years ahead and have these views and this vision been built upon and further advanced with the great leadership that we have here in the nation's capital in Abu Dhabi today. To give you some context, as part of our initiatives to create an open and diverse economy, the UAE government has really been empowering people to find innovative solutions to pressing challenges in business, in government, in science, and beyond. So as you can see in front of me, there are lots of amazing initiatives that we're proud of and that we're working on. And we really recognize that these areas of having a strong and stable economy, an established infrastructure, ease of doing business, and also having a great life is also really important to businesses being successful. But we don't just stop here. So what we focus on for financial services and fintechs is ensuring access to capital, an ecosystem of other buy and sell side firms and fintechs you can interact and trade with. So the key numbers here for you are 0 to 100, which is exactly where you want them to be. We offer 0% income tax and 100% foreign ownership for over 122 company activities. We're really a tried and tested place for you to establish your business and a proven expansion ground and a gateway to the world's fastest growing economies. The UAE's economy is actually one of the top 30 globally, and Abu Dhabi contributes to over 60% of the nation's GDP. We're also very strategically located. We really are that gateway, and we continue to pride ourselves on having a very open, multicultural community. We have an inclusive visa program, and 80% of the world's population is within an 8-hour flight radius. Ecosystem is really key to everything that we do here, and Abu Dhabi offers a range of support and incentives to help businesses from around the world succeed in the Emirate. We're investing very heavily in technology, and the government's put a lot of emphasis on supporting innovative entrepreneurs through accelerated programs like Khadam 21, and more generally, just through building a technology ecosystem. So we can support you via 3 key pillars here, which is access to capital, access to market, and access to talent. Abu Dhabi also provides financial support through incentives such as RDO's grants and rebates, and equity investments through key ecosystem players like ADQ and Mubadala. So if you're looking for a university partner to help you do research, we can connect you there. If you need a funding source, there are many different types, as well as an open capital market that you can take advantage of. Or if you're a firm that relies on an efficient infrastructure environment, we really have world-leading ability in terms of 5G, free zones, and international connectivity. When it comes to the financial services space in Abu Dhabi, I'll do a bit of a double click. There are plentiful opportunities here to really raise and deploy capital in an economy with high growth and favorable demographics. So the macro picture is, you've got a young, tech-savvy population, high GDP per capita. You can really use us as a regulatory and lifestyle-friendly launch pad to the rest of the MENA region. Our financial centre, Abu Dhabi Global Market, has been awarded the best international financial centre in Europe and the Middle East for the 2nd consecutive year. And operating under English common law, it's a jurisdiction that international investors are very comfortable in. It's also embraced a really forward-thinking view on virtual asset regulation, and is a leader in crypto, digital securities, digital commodities, and it's home to over 120 companies, including Citi, Blackstone, State Street, and more. At RDO, what we really do is focus on building 3 main areas of specialization upon our existing infrastructure and competitive advantage in the financial services space. So asset management, fintech, and commodities trading. So in fintech specifically, we have Abu Dhabi Global Markets progressive regulations. We have Hub 71 support programs and the wider ADGM ecosystem of companies. So this includes digital asset and tokenization firms, robo-advisors, insurtechs, open banking platforms, and payment tech, to name just a few. On the other side of the coin, if you're in asset management, there's tax breaks, proximity to sovereign wealth funds and family offices, really white space and investment opportunities, and the ability to grow your portfolio companies here in Abu Dhabi with RDO support. Finally, in commodities trading, ICE Futures and ADNOC are establishing a futures exchange in ADGM, opening with Merban. We also have that physical proximity to production and storage, and the opportunity to build tertiary business around this. So as the nation's capital and really the center of all these financial flows, stage is really set for Abu Dhabi to continue to grow as the UAE's financial services hub. Onto the RDO piece, which is how we can help you. So Abu Dhabi Investment Office is the government body that's responsible for promoting, attracting, and facilitating investment into the Emirate of Abu Dhabi. So we're really here to help you grow and succeed here in Abu Dhabi, in the UAE, and across the region more broadly. Our focus here is especially on companies with innovation at the core and supporting them to take advantage of everything that the Emirate has to offer. So what we really do here is supporting investors and businesses with an innovative focus to help ensure their long-term sustainable success in Abu Dhabi and across the region. So the way that we do this is through tailored and personalized investor care, guidance, and support on entering a new market, coupled with structured financial and non-financial incentives to help support and realize growth and ambition in Abu Dhabi. Our investor care team really offer a bespoke end-to-end support service to assist you with every aspect of your setup in Abu Dhabi. So you bring your idea and we'll make it happen. We know through our experience working with entrepreneurs that the more time you can spend on your great ideas and your go-to-market, the better it is for your business. And we really have this philosophy of helping in mind. When it comes to incentives, we offer a range of incentives to eligible investors with our ecosystem partners. So on the financial incentive side, this can be a pretty game-changing form of support to help bring your vision to fruition by making your investment go further. So this kind of acts as a runway extender or a growth accelerator. On the non-financial side, Abu Dhabi is that central government hub to support you as you explore the growth opportunities in the Emirate. So we assist with connecting you across the ecosystem to give you all the information and access that you need. In fintech, for example, we can explore how we can cover your key innovation cost centers that would really move the needle for you to enable you to think bigger. So for example, salaries, regulatory licensing costs, technology costs, rent, IT systems, really whatever form you need to support your setup and ultimately help you with your success in Abu Dhabi. We really want to attract innovators, founders, and startups to establish and grow here. We really believe we have the right incentives and environment to support your development in the long term. There are 3 main things I can leave you with to take away today would be, 1, we work with any company looking to expand or grow within Abu Dhabi. 2, we can be bespoke in the way that we support you by tailoring you as options from our entire menu of options. And 3, we connect with the entire ecosystem for a one Abu Dhabi approach. We're really open for business and there's a lot of opportunity and white space here. So we've outlined what we can give you, but the next step is for you to come to us and tell us what you need to take your business to the next level in Abu Dhabi. Thank you all so much and we look forward to working with you.
Hi, my name is James. I'm the relationship manager here at Yap. Yap is a digital banking application founded here in the UAE. Our goal is to revolutionize the digital banking experience in the Middle East, Africa, and South Asia. Our unique value proposition is really that we're a one-stop shop for digital financial services in general. We're designed as an application and as a company not to replace traditional banks. We think they're very good at what they do and traditional banks are very necessary, but we are designed to complement them. So we want to offer services, features, and products that users and customers may not have access to or may not even know that they would like to have. And so again, that is the complementary relationship that we aim to have with banks. Some of the features that we do offer, which these features that will complement the relationship, firstly, customers do not need to have a minimum salary or minimum balance to have a Yap account. That is unique in the region, and we're proud of that. We also offer super simple, intuitive 360-degree view through our analytics page. So on the app, you'll have an analytics page where you can see all of your expenses, and we'll sort them out for you by day, month, by merchant, by category, so you can know exactly what you're spending on, how much you're spending, and where you can save. We also have super easy money transferring, so you'll be able to send, at least what we're building, what we're trying to do, is for you to be able to send money to your friends as easily as you send them a WhatsApp message. Whether that's locally here in the UAE or internationally, that's really what we think the standard should be. Paying your bills, we do have bill payment on Yap. Whether it's Spotify, Netflix, your utilities, your Wi-Fi, your phone bill, whatever it is, you can integrate all that with Yap. Pay at the touch of a button, set reminders so you don't forget every month. So again, always trying to, 1, give control back to the user, and 2, make their experience more simple and more efficient. We do have real-time notifications, so every time you spend, transfer, whatever it is, you'll get a real-time notification informing you that that was successful. Freeze your card is a pretty cool feature for safety mostly. So people, if you lose your card, you misplace it, you'll be able to freeze it at the touch of a button. And when you find it, unfreeze it at the touch of a button. And some people may just want to leave it frozen at all times, and thus they're using it, right? And setting limits as well, allowing only certain categories, only online purchases, only ATM withdrawals, whatever it is, certain amounts. So again, giving control back, setting limits, and freezing your card. Another safety feature, which is really cool, which we're excited about, is virtual cards. You'll be able to create multiple virtual cards on Yap and customize them, the color, the name, and they'll each have their own card number, their own CVV, and their own expiration date. And the reason this is important is if you're making an online purchase, you may not want to use your primary card. So you may want to use a virtual card, which you can top up with only the amount of that specific purchase, so you can have peace of mind that extra money won't be taken out if you don't trust the merchant. Splitting the bill, another really cool feature. If you go to dinner with a bunch of friends, you'll be able to split the bill with them very easily. Simply tap on the bill after you've paid for it all with your card, tap the friends that are at the table with you, send them a request, and they'll send what they owe you straight back, and it'll all be instant at the touch of a finger. QR codes, what if there's a friend of a friend and you don't have their contact in your phone? You can just ask them to pop out their QR code anytime you want to transfer money back and forth, scan that QR code, and send money as easily as it is to send a WhatsApp message again. Our customer service team, one of our big selling points, they're sitting right over there behind us. They're excellent, top-notch customer service team. You can chat with them on the app live chat option, WhatsApp chat with them, talk to them on social media. They're super responsive, and we're really hoping to provide a unique service which has been missing in the industry through that. Lastly, we have our Yap Store. The Yap Store is really a region-specific feature where we're going to be releasing new products which are specific to that region or to that country. Two examples of that here in the UAE. The first would be Yap Young, which is focused on, as it would say, young people, for parents to be able to, teach financial literacy, financial responsibility to their kids, allow them to have a card, do chores, earn money, things like that. The second would be Yap Household. Yap Household is aimed at employers who may have household help and need to pay them up until now by cash. They'll be able to have sub-accounts under the employer's account to be able to pay them that way. So that's Yap Store. So that's the product as far as the UAE goes. We're really excited. We do have aggressive international expansion plans. We've already signed contracts in Pakistan, in Ghana, in Saudi Arabia, and we're very excited about that. And there are a few other countries in Africa specifically, which are in talks and on the way, which we're hoping to announce publicly soon. So stay in touch, follow us on social, keep track, and we'll see you guys around soon. Thanks a lot.
Good morning and good afternoon, everyone, and welcome to the FinTech Nations Hackathons. I'm Mehdi Swidi, I'm the head of FinTech and the founder of What the FinTech, and I'm very glad to be part of this amazing project. Let's start with this presentation because I'm the guest speaker right now, and I would like to share a bit with you my story. So I'm one of the early stage guys on the FinTech in Hong Kong, where I joined the industry in 2016. And since that day, I has worked with several startups, and I joined DBS for more than 3 years, where now I'm looking at integrating startups and fintech startups to the DBS ecosystem. So how we collaborate is mostly based on the technology, where we can co-create solutions together, develop a proof of concept together, or see how we can support each other with APIs or new technologies. We can onboard the technology of the startups, but we can also help startups to scale up with some of the APIs that we have developed over the past years. And my job is really to looking at problem statements and pain points in Hong Kong. So if you have suitable solution for Hong Kong, I'm really happy to be in touch with you. You can contact me directly on LinkedIn, and we can see how we can collaborate moving forward. I'm also the founder of What the FinTech. What the FinTech is a social media series, mostly on LinkedIn, but we also have channels on Twitter and Instagram. The goal of What the FinTech is to share knowledge with everyone, and there are 3 pillars on that platform that I have developed. The first one is video, where I do one-on-one interviews with FinTech and innovation startups founders, where we try to understand everything from that perspective of the entrepreneurs and give them a room to express themselves with a large public. So I do interview of 5 minutes mostly, where we try to understand what is doing the company, what is the main product, why they have started company, and how the company moved from day one to now, because those companies has most of the time more than 3 years of existence. And we try to really understand how they can change the industry, challenge status quo, and improve the business models of such industries. I have done more than 25 videos with really known people in Hong Kong, but also in Asia or internationally, We have spoke with some robo-advisors such as Privé Technologies and Quantifeed, but also a really hot topic recently, digital assets and central bank digital currency, with really famous speakers such as Charles Dossi, with the head of APAC for Consensus, Henry Aslanian, with the head of crypto for PwC, and also the host of Crypto Capsule, and Duncan Wong, who is the CEO of CryptoBlock. We ask many questions to these persons. We try to interact with our followers to know what they would like to see and what are the questions that they would like to ask to the speakers. And I'm really glad of this, creating these videos, because I think it's a good room to share knowledge with everyone, but also see what is the trend right now in terms of innovation, new technologies, and buzzwords. The second thing is I've developed a newsletter that I share every Sunday morning in Asia, and I really focus on cryptocurrencies, digital assets, and also on the different regions of Asia. So we collect with my friends some articles related to innovation and fintechs in Hong Kong, Singapore, China, and the rest of Asia. So the idea here is to share with you the latest trends and the recent news that you may have missed during the week, do a kind of recap for everyone, and also share action items from companies. It's really interesting to see how the things are moving forward in Asia, and I'm really happy to share that newsletter with almost 15,000 followers right now on LinkedIn, and I started only 6 months ago, so it's a growing newsletter. I'm happy to share it with you. You can follow me on LinkedIn and subscribe to the newsletter and give me your feedbacks to improve the quality of that newsletter, but also know what you would like to know in the future. The third thing will be a regular post. It can be infographic related to fintechs, tokenization, UI, UX, and also some recently some games such as FinTech Crossword, where you can participate on those games and see if you can complete those challenges that I propose to you. And I share all the things on LinkedIn, Instagram, and Twitter, as I mentioned before.
Hi all, welcome to my talk on central bank digital currencies. First and foremost, though, I would like to thank the FinTech Nations team for inviting me to be part of this tremendous event, the FinTech Hackathon. Aside from them, of course, I would like to thank all of you for attending this talk. So, without further ado, I would like to proceed by sharing my presentation. So, as I said before, the title of my talk is Central Bank Digital Currencies in Asia, Main Projects. What I'm going to try to do throughout my presentation, which as you can see has many slides, but I'm going to try to make it as short as possible, is to explain, first of all, what CBDCs are. This is a concept which I'm sure that most of you have already heard lately, but still I feel like it is important to establish, to define exactly what a CBDC is and what a CBDC is not. Aside from that, I'm going to talk about CBDCs throughout the world, focusing on Asia, because the main focus of my talk is precisely the current status of CBDCs throughout Asia, focusing, of course, first of all, in the digital yuan, China's central bank digital currency, which is by far the most advanced project in Asia and actually in the whole world. After that, I'm also going to make some mentions to the current projects in South Korea, Japan, and also to the project Aber, a joint project between the central banks of Saudi Arabia and the United Arab Emirates. So, as you can see, this is like the overline, the index of my talk. Basically, about myself, well, I'm going to dwell on myself for longer. I just want to say that I've been involved in this CBDC area for quite a while, doing research on mostly the digital yuan. I'm writing articles weekly on this topic. I'm participating in international conferences quite often as well. Aside from that, though, aside from my speaking part and my writing, I'm also member of the Digital Euro Association, which is a think tank focused on studying digital euro as well as other digital currencies. And in general, as you can see here, I'm quite involved with the blockchain and digital currency world. So, central bank digital currencies. What are CBDCs? Before that, we need to talk about what central bank money is. Central bank money is a legal tender issued by a central bank. It's a claim against a central bank. So basically, every time you use a yuan, a euro, a US dollar, you are using central bank money because that money, that currency, has been issued by its respective central bank. And it's a liability that you have against that central bank. So this concept is not more complicated than that. This is like common sense. But what's a CBDC? Well, a CBDC is like a step further. A CBDC is a central bank digital currency. So it's nothing else but a digital form, a digital version of that central bank money. In other words, the digital yuan is the digital version of the yuan. The digital euro is the digital version of the euro. It's not more complicated than that. It's actually quite simple, quite straightforward. But actually, it's more tricky than that because CBDCs, unlike traditional coins and notes, are what we call programmable money, which means that we can add and remove features to it because it's digital. So, what's a CBDC? Well, before giving you like a proper definition, I should start by saying that there are two kinds of CBDCs, wholesale CBDCs and retail CBDCs. The idea behind wholesale CBDCs is to facilitate central bank clearing operations, interbank operations, while retail CBDCs are those made available to the public at large for them to use it for domestic retail payments. CBDCs, central bank digital currencies, have some key aspects. The two key aspects of CBDC are the ones that you can see in here. All CBDCs need to be digital because all of them are the digital version of a coin, of a central bank money. At the same time, all CBDCs are going to represent per se a liability against a central bank. So those two features are common in all CBDCs. But aside from that, CBDCs may have some additional features that not all central banks are going to add. And it's important to remark this part because, as I said before, CBDCs are programmable, which means that not all central banks are going to be willing to include some of these features. It's going to depend on each central banks, on each country's policies, interests, etc. So, some additional features are those that you can see in here when it comes, for example, to the holders, to transparency, to convertibility, etc. There are some possible motivations behind CBDCs. Same as I said before in my previous slide, there is not just one reason behind CBDCs. There are many. So, for example, the reason why China might be testing and eventually deploying its digital yuan may not be actually the same reason why, for example, the European Union may be testing and eventually deploying in the future its own CBDC, the digital euro. The motivations behind may be different. This list shows you some of the possible motivations. CBDCs will or are intended to some extent to replace physical banknotes. That's quite obvious. If you have a digital version of that currency, you don't need to print so many coins and notes, no? It's quite obvious, and especially now with this COVID-19 pandemic going on, this motivation has become much more clear, much more relevant, since many people are obviously worried that it's not hygienic enough to keep using notes that are being touched by everybody. But still, to me, this is not the main motivation that many countries will have behind CBDCs. There are many other motivations in here. For example, monetary policy. One of the principal motivations may be precisely to try to reduce the lower bound on interest rates. CBDCs may also be helpful when it comes to improving financial stability. CBDCs may also be helpful when it comes to promoting financial inclusion. And to me, this is a key point. Financial inclusion is very basic, especially in countries like sub-Saharan or areas like sub-Saharan Africa, India, Bangladesh, Pakistan, areas where the amount of what we call underbanked people is very high. When I talk about underbanked people, I'm making reference to those people who have no access to traditional bank accounts. This is all because, for example, they live in small towns where there are no physical bank branches of any bank whatsoever. So these people, in many cases, they have smartphones, they have access to the internet, but what they lack is access to a physical bank branch. So having a CBDC available to those people, to those underbanked people, is going to allow them to become part of their respective financial systems. So this is actually a very strong motivation behind CBDCs as well. It may also be useful as CBDC for global geopolitics, for financial crime prevention reasons, etc. As you can see, the list is very long. But in any case, a CBDC, which, as I said before, is a central bank money available to the public, should in any case enable cheap, secure, and fast transactions, and should be accessible without a bank account. This part is actually very important. It is very important because the idea behind CBDCs is actually trickier, much more complicated than the idea behind, for example, whenever you use your traditional money through a digital banking app. A CBDC is much more than that. But, and I think this part is very important, CBDCs are not cryptocurrencies. It's very important to have this part very clear. So basically, I'm sure that you've all read in the media about CBDCs and cryptos, and I'm quite sure as well that you must have read someone talking or referring to CBDCs as cryptos or as something similar to Bitcoin. That's actually not accurate. It's very important to be able to differentiate or distinguish some terms. Like, for example, blockchain. Blockchain is a technology which underpins the operation of cryptocurrencies for sure, but blockchain can be applied to many other different areas, such as healthcare, central bank digital currencies, trade finance, life sciences, etc. So that's the first distinction I need to make. But this doesn't solve my question though. Like, okay, cryptos use blockchain, but CBDCs may use blockchain as well. But are CBDCs the same as cryptos? No, they aren't. They're not so, because actually the idea behind both is the opposite. The rationale behind both is not the same. Cryptocurrencies are part of what we call DeFi, decentralized finance, whereas CBDCs are actually the opposite. They are central bank money, which means that they are issued by a central bank, and the idea behind CBDCs is actually more the idea of control rather than decentralization, which is the idea behind cryptocurrencies. So this is why I said that they are not the same. However, as you can see in my slide, in this one, CBDCs may have some similarities with cryptos, as you can see here with the digital yuan case. So in other words, even though the rationale behind CBDCs and cryptos is actually, to some extent, pretty much the opposite, technically speaking, CBDCs adapted or even copied many things from cryptos. For example, focusing just on the case of the digital yuan, you can see that both CBDCs and cryptos use both online and hardware wallets. So digital yuan is going to use this feature that normally, traditionally, comes from the world of cryptocurrencies. Same applies to the use of two-key architectures to secure transactions. This idea is also an idea that the digital yuan, as well as many other CBDCs, I'm sure, will get from cryptos. So that's why I said that, yes, it's true that CBDCs are not the same as cryptos, but technically speaking, CBDCs have many similarities with cryptos, even though, of course, we need to bear in mind that the idea behind this is actually the opposite, because cryptos are made to be decentralized, non-controlled, whereas CBDCs are made to be controlled. Then, moving to the next slide, we may wonder as well whether CBDCs are going to use blockchain or not. Because, as I said before, all cryptos, or normally cryptos, use blockchain technology. But we may be wondering, are CBDCs going to use blockchain as well? Well, the answer is yes and no. It depends. CBDCs per se, as I said before, are quite flexible, which means that each central bank is going to design its CBDC, its own CBDC, depending on its own interests, objectives, policies, etc. First of all, that. And secondly, even if a central bank decides to use blockchain technology for underpinning the operations of its own CBDC, it doesn't mean that necessarily blockchain will be applied to the whole process. For example, focusing on the case of the digital yuan, as you can see here in the latest part, China's digital yuan is going to be operating through a two-tier structure in which the People's Bank of China is going to issue the digital yuan to the commercial banks without using blockchain. But those four commercial banks, and later on fintech firms that will be added to this pool of issuing authorities, are going to offer this digital yuan to the general public by using blockchain. So that's why I said the answer is neither yes nor no. It depends. China started to operate this BSN, blockchain-based service network, last January 16. This network wasn't specifically made theoretically to underpin the operations of the digital yuan. It's made to support future CBDCs, not only digital yuan, but to me it's quite clear that the idea behind the companies, which you can see here, developing this BSN was to start by underpinning the operations of the digital yuan, to later on move to other CBDCs. You can see in this slide an example of how or what the digital yuan is going to look like were incorporated into the wallet app developed by the Agricultural Bank of China. For those of you who are familiar with cryptos, well, you're going to see that this design is not actually very different from that design that you can see in most wallet apps, in those wallet apps where people keep their cryptos after, well, buying them and before selling them in case you want to sell them, etc. And this is so because, as I said before, even though CBDCs are not the same as cryptos, technically speaking, CBDCs get many things from the world of cryptocurrencies. So, what is the current status of CBDCs throughout the world? Well, according to a report published by the International Bank of Settlements last January, 80% of central banks are already working in CBDCs. When I say working on CBDCs, I don't mean actually testing CBDCs or being about to deploy CBDCs. What I mean is that they are doing some kind of research, at least, on that. It doesn't mean that they are all going to deploy their own CBDC, etc. This was last year, and this idea is actually going to increase because of the COVID-19 pandemic. You can see in here some examples of current CBDC projects in these two slides. As you can see, there are many projects going on, and we're going to focus on all of them. If you read this Bank of International Settlements report or any of the subsequent news regarding this topic of CBDCs, you are going to realize that by far the continent, the area of the world where CBDCs are attracting more interest is precisely Asia. Asia is by far the place in the world, as I said, where the interest is higher. Not only China is already testing its digital yuan, but there are many other countries which have shown interest in doing so eventually. Korea, Japan, Vietnam, the Philippines, Cambodia, Thailand, the list is quite long. Aside from China, the other two countries which seem to be more advanced are South Korea and Japan. Not as advanced as China, but still quite advanced nonetheless. Basically, South Korea and Japan are going to test their own CBDCs throughout this year 2021. When it comes to Japan, for example, the Bank of Japan, which is Japan's central bank, stated that their intention was not to develop their digital yen and eventually deploy it automatically. Their intention with these tests was to try to see whether it was feasible or not, technically speaking, to do so. So I think the idea behind those tests is precisely to test, well, how it may work, etc., without eventually deploying it yet. But if at any time in the future Japan or Korea decide to deploy it, it's going to be easier for them because all that testing part will already be completed. So that's the idea behind those tests in Korea and Japan. And to be honest, I feel like both central banks, Central Bank of Korea and Japan, maybe they sped up a bit their tests because of China's move, because they don't want to fall behind. So that's why, well, everyone's trying to test it to some extent. Now, without further ado, I'm going to focus on one of the core parts of my talk, which is the digital yuan, which I'm sure most of you have already heard in the media. So basically, Beijing is creating its own CBDC. The research started 6 years ago, actually almost 7, in 2014. But it was last April, in 2020, when China announced that this digital yuan was actually going to be tested, put in practice, finally, after those years of research. This digital yuan is also known as DCEP. DCEP stands for Digital Currency Electronic Payment. So whenever you hear people in the media talking about digital yuan, DCEP, eRMB, eCNY, they are actually all of them referring to the same idea. They are all talking about the digital yuan. The digital yuan tests started in those 4 cities that you saw before on my previous slide, in Shenzhen, Suzhou, Xiong'an, and Chengdu last April and May. And they are actually about to be extended to other areas, among them the Greater Bay Area, which encompasses Hong Kong and Macau. The tests actually in Hong Kong have not started yet, but they're about to start. And they're going to be very interesting because they are going to allow to see how the digital yuan is going to be used for cross-border payments. And please keep this idea in mind, because as you may remember now, I talked before a lot about the possible motivations behind CBDCs. And to me, I may be wrong, but to me, the main idea behind China when deploying eventually its digital yuan will be to internationalize the yuan. I say so because China has never managed so far to challenge to any extent the US dollar position. But I think they're going to try to convert some of the US dollar denominated transactions in international trade and convert them into RMB denominated ones. And in order for them to China to do so, they need to test, to check that the digital yuan is actually useful when it comes to making cross-border payments. And I think so. I think this idea that I'm talking about, cross-border payments, is, well, it's the main idea behind this digital yuan because of China's movements lately. For example, in early February, China signed the People's Bank of China signed a joint venture with the company SWIFT, the payments company SWIFT, which I'm sure all of you already know, through which the international yuan is going to actually be internationalized. So I think the idea is there. I mean, there may be, of course, many other motivations behind, but to me, that's the main one. As I said before, the digital yuan is structured on a 2-tier monetary system in which the People's Bank of China issues that digital currency to the commercial banks, and then the commercial banks, the 4 ones, are going to issue the digital yuan, the digital currency, to the general public, to the citizens. The China's CCP will have many advantages. I just listed a few here, but I'm sure there are many more. To me, I mean, well, the first this is going to allow China to create a very important soft power tool, as I said before, because China will increase its influence in many areas, most notably the Belt and Road Initiative area, also the RCEP free trade area, etc. It's also going to help China to control its financial system much more efficiently, therefore, for example, reducing its shadow banking system. It's also going to help China to reduce some costs, for example, money printing costs, which is quite obvious. I mean, if you print less notes, you are going to spend less money in doing so. I mean, it's pretty obvious. And aside from that, it's going to reduce some kind of costs for both the commercial banks and the general public. It's going to reduce interbank costs and also the fees that the general public is going to pay, since it's going to be virtual rather than physical. On this slide, you can see as well some more images of what the digital yuan wallet app is going to look like when integrated into other apps. As I said before, it's not that different from the existing payments apps or even from the existing crypto wallet apps. So where are we now? Well, China is testing this digital yuan quite massively. It's actually going in crescendo, these tests. Those massive giveaways that you can see listed here in this graph started last October in Shenzhen, where a lottery was made in which 40,000 people were given 10 million RMB to spend in more than 3,000 shops in Luohu district. And those tests are actually being rolled out and extended until today, where, as you can see, the amount of people involved in those tests, as well as the amount of money involved in those, is actually increasing, because China is like going through this process in a phased and organized manner. They are moving from phase to phase. Since all the previous phases seem to be working, this is why they are moving to the next phase, and so on and so forth. The tests in Hong Kong and Macau, as I said before, are going to be useful when it comes to testing the digital yuan for cross-border payments. And we need to keep this idea in mind. I know I'm repeating this idea a lot, but it's very important because, to me, China's main interest behind the digital yuan is to deploy it internationally for cross-border payments. And Macau, and especially Hong Kong, are the perfect platform for doing so. This slide here is also very interesting because it allows you to see what are the differences with existing payment apps. Basically, the CEP offers a much higher transaction speed when compared, for example, to Libra, which now is called Diem, which is Facebook's led digital currency project, or also when compared with Bitcoin. So I think the main two takeaways that you need to get from this slide is, on the one hand, the fact that this CEP is going to be much faster, and also the fact that this CEP is going to support offline payments, which is something very important, very relevant as well. So this concludes my part on the digital yuan, and I'm going to start now talking about one more project, which is called Project Aber, and this involved the central banks of Saudi Arabia and the United Arab Emirates. As I said before, this project involved those two central banks, but also 3 commercial banks of each country were included. So in total, it involved the Saudi Central Bank, the United Arab Emirates Central Bank, as well as 3 commercial banks from Saudi Arabia and 3 from the United Arab Emirates. Project Aber stands, well, actually, Aber in Arabic means crossing boundaries or crossing borders. And this was precisely the idea. This project intended to analyze whether a wholesale CBDC for interbank payments between the central banks and a few commercial banks from Saudi Arabia and a few commercial banks and the central bank from the UAE was technically possible. And also, the second idea that this project wanted to test was whether the use of blockchain was advisable or not, and also whether blockchain should be used in the future or not. This initiative was started in January 2019, and the final report was published on November 30, 2020. So it took almost 2 years to reach those conclusions that I'm going to explain later. For all those of you who might be interested in digging deeper into this topic, you may all download the report. It's a long report, but very interesting, where you can see how the conclusions were reached, what were the exact conclusions, etc. As I said before, the main conclusions was that technically it was viable and possible to use blockchain technology to support this wholesale CBDC between both countries. The performances were not only met, but they were exceeded when it comes to both the idea of creating this potential CBDC in the future, but also when it comes to the idea of using blockchain as a technology underpinning the operations of said CBDC. This project also identified further areas that need to be explored in the future between both central banks. So, both central banks are quite likely going to move forward by also testing these possible areas identified. Does it mean, though, that this CBDC between Saudi Arabia and the United Arab Emirates is actually going to be deployed anytime soon? No, it doesn't mean that. It was a study to see whether it was feasible to do that or not. It doesn't mean that they are going to do that necessarily anytime soon. But still, it's good to see that they tested that, because it means that, well, the idea is there and it's likely that they might deploy it in the future. This concludes the main part of my talk. I'm just going to conclude by giving you some ideas of the many ideas I tried to give you before. Basically, if China's digital yuan proves viable, and it will because the tests are actually going very well so far, China will be the first major economy deploying its own CBDC. Pay attention to the word major economy, because there is one country in the world which has already deployed its own CBDC, and this country is the Bahamas. They already deployed, they launched officially the sand dollar, as it's called, last October. But the Bahamas are not what we call like a major economy. This is why I said that China will be the first major one deploying a CBDC when eventually deployed, which should be, according to Beijing, by the Winter Olympic Games in 2022, which are going to take place in Beijing precisely. Many other countries will not only follow China's lead, but they are already doing so. As I said before, South Korea and Japan will start their tests very soon this year. Would they have done the same? Yes, quite likely they would have done that sometime, but quite likely not that fast. So that's why that I said that China's velocity is actually encouraging other countries to follow its lead. For example, in Europe, the European Central Bank announced that their intention is to test and eventually launch their digital euro within a time span of 2 to 5 years. So China has not invented CBDCs, but China's velocity in doing so is encouraging others to follow its lead. Also, I mentioned this RCEP. RCEP is going to allow China to deploy its CBDC, its digital yuan, cross-border quite efficiently and quite promptly. Because, as I said before, the main idea behind digital yuan to me is when it comes to cross-border transactions. Before finishing, though, just one more remark. We need to bear in mind, though, that even though digital yuan is the most advanced project, this is not the only project going on in Asia when it comes to CBDCs. I mentioned South Korea, I mentioned Japan. I could mention as well, as I said before, Project Avar. There is also the project Intanon Lion Rock between the Central Bank of Thailand and the Hong Kong Monetary Authority. So the projects are many. China's one, the People's Bank of China digital yuan, may be, of course, the most advanced one, but it doesn't mean that this is the only existing project. So this concludes my presentation. Thank you very much for attending it. It's been a pleasure. And feel free to ask me any question or feel free to connect with me on LinkedIn. Thank you very much.
A very warm welcome to all participants of the FinTech Nations Hackathon. I am Wong Yu Zhang, the Director of the Community Engagement Department at Cyber Youth Singapore. We are very happy to support FinTech Nations and be part of its journey to help solve some of the biggest challenges banks face on their platforms and services nowadays. I am sure many of you have spent the past week ideating, reviewing, and refining your projects. We are all very excited to see what amazing, creative ideas you all have come up with. Cyber Youth Singapore is a Singaporean charitable national movement committed to advancing education in the area of technology. We are a completely youth volunteer-run organisation serving as a conduit between various government agencies and local schools. Founded a little over a year ago, we currently have over 1,000 youth members and seek to grow to over 10,000 strong in the next 7 years. We seek to be the national platform for which our youths can play a part in Singapore's digital future. We serve to build and establish the strong foundation of our digital future, seeking to provide a platform to empower youths to be able to safely and responsibly explore their interests in technology. Our programs are based on the Cyber Youth Manifesto, which outlines 3 pillars of programs: engage, educate, and experience, with 9 areas of focus. We believe in engaging our youths, allowing them to establish camaraderie and bond with their future industry colleagues. CYS hosts regular monthly meetups to facilitate this. We invite industry professionals and leaders to share their thoughts on topics of interest to use to give our youth an insight and opportunity to learn more about the tech industry. These distinguished guest speakers are industry leaders such as the CEO of Razer FinTech, who has spoken to our youths about Razer FinTech and its story. We also believe in exposing youths to the industry. In light of this, CYS runs programs such as the Youth Cyber Exploration Program. It is an introductory bootcamp on cybersecurity, exposing our youths to basic cyber administration, offensive and defensive skills. They were also introduced to the dangers of social manipulation and how people are the weakest link in the cyber chain. Through this program, we hope our youths will learn to understand the sheer importance of cybersecurity in the hopes of them considering taking it up as a profession. CYS actually has an upcoming event called the CYS Summit, our annual flagship event that is going to be held in June this year. It provides a platform for all youth in technology to explore their interests or demonstrating their skills, abilities, and talents. If this interests you and you would like to find out more, or if you would like to partner up to support such an event, you can join our Discord server or email me. I'll be sharing the details at the end. CYS has forged relationships with not only technical partners, but also youth developmental organizations that allow us to not only develop our youths technically, but also cultivate ethical values such as sincerity and perseverance in our youths. We work very closely with the Cybersecurity Agency of Singapore, Singapore's National Youth Council, and private sector organizations such as AWS Educate and Razer to ensure we develop the next generation of youths to be robust and future-ready. We believe the ideals of youth empowerment, which forms the basis of the cyber youth identity. It is an identity that recognizes the ABCs of youth: aggression, boldness, and creativity. These attributes, when directed and molded correctly, can lead to astonishing things. In light of that, we have a youth identity called the Cyber Youth Collective, made up of budding youth enthusiasts that may one day champion the cybersecurity industry. There are a lot of like-minded youths in the CYC, all passionate about one aspect: technology. This collective has a diverse and inclusive environment, focusing on providing all youths with a platform to explore their cybersecurity interests. Any youth is more than welcome to join, regardless of their technological competency, knowledge, or background. Our digital engagement team makes sure that our youths are well bonded through online means, through small events like chit-chat or gaming sessions on our Discord server, playing games like Among Us, Counter-Strike. There are a lot of like-minded youths in the CYC, all passionate about one aspect: technology. The collective has a diverse and inclusive environment, focusing on providing all youths with a platform to explore their cybersecurity interests. Any youth is more than welcome to join, regardless of their technological competency, knowledge, or background. Our digital engagement team makes sure that our youths are well bonded through online means like small events such as chit-chat or gaming sessions on our Discord server, where we play games like Among Us or Minecraft. Youths usually congregate in the Discord chats to ensure knowledge about certain topics and create friendships with one another. Webinars and exclusive workshops are also some other things that CYC members can look forward to. Some workshops we've gone through include creating a personal website using HTML5 and CSS3, and creating your very own Telegram bot. The upskilling of our youths are very important to us, with them being the next generation of cyber professionals. Cultivating our youth's interest is another important aspect. Youths can opt to join our special interest group based on what they like to learn more about in the areas of cybersecurity. Red teaming and blue teaming are just two of the topics that the youths can further explore when joining our special interest groups. Moving forward, FinTech Nations is undoubtedly a platform for our youths from Singapore and beyond to showcase their creativity and boldness to try new things, venturing beyond overly traveled paths. Moving forward, we are excited to collaborate further with FinTech Nations and its partners to continue establishing platforms to support our youths in the entrepreneurial aspirations and creativity, as well as to create global opportunities for them. Should you wish to find out more about what we do at CYS, how we can collaborate, or just meet up for a chat, please do not hesitate to join our community Discord at go.cyberyouth.sg/discord, or send me an email at yuzhang.wong@cyberyouth.sg. Once again, we surely look forward to the amazing creations and ideas that you have come up with, and we hope to see you again. Thank you.
Hey everybody, so because we have the Coin Nation Summit, and I'm very, very excited to basically show you a glimpse of what we are talking about. So some of you have heard about Top Shot. It's with the NBA. So basically you can get your best moments, and that's an amazing technology over the blockchain, and we're gonna discuss it. But first I wanna go to my profile to show you a glimpse. I made a demo account here. So here you can see a pack. So this is a pack I just purchased, and I'm going to open it just now with you. Of course, everybody wants me to open it, and I want to open it to see what's inside. So this is the pack I just purchased. It only cost me $14, just for the example. And I'm going to open it right now. Ooh, what are we going to get? So I'm very curious. Now, it's you into the environment, the atmosphere. Wow. So I can see the serial number here. Films. I can basically go to the next one. That's basically a package if you build it. We're going to have much more, and we're going to go and drill down into the technology details. So of course we're going to show you the marketplace and everything, but yeah, that's just to show you how it looks from the inside. And there's a huge buzz around that, and there are other technologies that are coming based on the blockchain that we're going to discuss during the summit. So thank you very much, and I hope you enjoyed this short clip. Until the next one, bye-bye.
Bloinks, helping people build saving communities.
With the pandemic, my 2 kids started with online classes, and my husband and I with home office. There are now meetings and classes all over my house. I had to buy a new computer. Fortunately, I had some savings, but many moms don't. And some can't get a credit from a bank because they make their living with part-time or informal work to be able to attend their children. In Mexico, we organize a tanda, or Rotating Credit and Saving Association, where a group of people make periodic payments and the back goes to one of them until everyone gets the back once. The first spots on the list access an interest-free loan, and the last spots use it as a saving method. This is usually done exchanging cash and with people you trust, like family members or office friends. With COVID, the need for these loans is increased, and with people mostly staying at home, the cash exchange is difficult. Our decentralized application will allow people to build saving circles regardless of location. The users will send the payments to a smart contract that will handle all of the administration and distribute the bag to the assigned participant. We will also implement a reputation system to increase trust between circles.
This is how it works.
First, we're going to create a new ROSCA. So we click here on Create. We must specify the saving amount and the frequency of the payments. Then, we select how many participants will be saving with you. In this case, we are creating 7 slots. After these settings, you'll be given a code session that you must share with your friends in order to begin saving together.
We deployed the smart contract on the Robsten testnet with 2 participants and a saving amount of 0.5 Ether. In this short video, you can see the transactions between these 2 users.
Usually, a ROSCA is administered by one person, and there can be misunderstandings between friends and family members that can end badly. The benefit of using blockchain is the transparency and the immutability of the transactions. Plus, the role of the administrator is taken by the smart contract. The users will pay a security deposit to register to the saving round. This is where 2 income channels come from. We will charge a fee of around 7% of the security deposit, and we will keep these payments during the round and manage them to generate interests with protocols like Compound or staking the tokens. We're a multidisciplinary team with experience in project management, marketing, blockchain, and software development. What makes us unique is that our application is trustworthy and self-manageable. And since a lot of people already use this saving method, then it's a great introduction to people to blockchain and crypto. In Bloinks, we're taking an informal financial practice and modernizing your savings. Thanks!
So only 2 months into 2021, and Vietnam has recorded 10,000 cases of people seeking help online for being the victim of financial fraud. Why is there such a large number of people deciding to ask for advice on social networks instead of approaching authorities? Problem is, most authorities in Vietnam still operate under complicated procedures and fragmented data system. This makes it really hard for people to access the right knowledge at the right time. Either it's too late to know that with your leaked identity number, scammer can wire you to a loan without your consent, or because it takes forever for the police department to process that the scammer has already run away with your money. Better access to credible information is the key to tackle financial fraud, and Garnish is just the right tool. Garnish is an inclusive data hub for fraud prevention from end to end. Our feature includes Scam Dictionary provides information about how to recognize, prevent, and avoid scam before it happens. If you are a victim, Get Help feature provides detailed guidelines to report your case and reach authorities on time. News and statistics provides insight into current criminal situations. You can choose to have alarm of the new methods soaring in your regions to protect yourself early. Let me take you on a tour. Here, you can learn your risk with Scam Dictionary. Avoid stumbling into one with warning sign and guide to protect yourself when encountered. If you are already a victim, Ganesh will make it easier for you to send your claim to authorized department or to reach an office nearby. Subscribe to the latest scam news in your preference and share the information to protect your friends and family too. If you have any question or wish to collaborate, don't hesitate to drop an email. Right here. Hit send and it's done. We are working to deliver the best product to our first adopter, individual consumer and small business in Vietnam, who are suffering from limited access to fraud protections. That is 56 million, of which don't have banking records. Our next steps is to improve data infrastructure, find more partnerships, and strengthen legislations for customer needs. That's why we are looking for engineers to join our team, legal consultants, and collaborations with partners that own trustworthy data systems such as banking, credit institutions, and insurance firms. Join us today and let's connect to bring protections to our assets and of others. Ganesh team, thank you for listening. Have a great day.
Blockchain technology is revolutionizing the way our economy works, but it hasn't been possible to operate on it with real money until now. IOCash is a new fintech platform that allows you to create business models in which fiat money operates directly on blockchain, with advantages such as efficiency, immediacy, and security, and without the problems associated with public cryptocurrencies. In IOCash, all account funds are electronic money under European and American regulation that, thanks to our platform's technology, are able to live on the blockchain. This opens a new world of possibilities for your business ideas. Not only does it provide better security for transactions that are able to operate in the new economy, but also money is now smart and programmable. The applications are countless: e-commerce, international trade, crowdfunding, contractual payments. IOCash allows you to create services in a decentralized environment that increase trust between all parties. The future is in blockchain. Prepare your business for the new economy and start using the money of the future today. IOCash, real money on the blockchain.
So that was our animated video, and now we will go a bit deeper in IOCash. IOCash is a fintech platform that enables the use of regulated digital payments on blockchain technology. IOCash connects core banking systems with blockchain, basically tokenizing balances and making funds available to be operated from both the banking and the blockchain worlds, enabling the use of regulated digital money on-chain. Client applications can then interact with accounts and access all payment functionalities from the IOCash API or directly through blockchain via transactions and smart contracts. IOCash is currently connected to a licensed electronic money entity in Spain, so all money is completely regulated, unlike stablecoins. IOCash can be deployed and used in any Ethereum-based network and currently supports accounts and payments in Euro. Some of the key features in IOCash include wallet accounts with unique IBAN number and DLT address, multiple funding and withdrawal methods such as SEPA transfer or credit card, escrows without third parties, programmability through smart contracts, increased traceability and resilience of data, cross-chain value transfers, and enabling atomic delivery versus payment against digital assets. IOCAS can be used on multiple use cases such as fintech, crowdfunding, marketplaces, IoT, capital markets, and much more. For more information, please visit the product website or the dev portal. IOCAS was developed and maintained by the IO Builders core team. So that was IOCAS. Thank you for your attention.
Hi, this is an e-commerce web app which I called EasyBuy. What is an EasyBuy? EasyBuy is a product financing service which provides loans for users to get product online. So first and foremost, I will have to sign in as a user. Now I am in as a user. So the next is to select an item and add it to my cart. Now I added an item which cost me 300 naira. Next is to proceed by clicking this button, Pay with EasyBuy account. And for me to be able to have access to this service, I must have registered my details like credit card number, international identification number, and phone number. This will make me to have full access to this service. So after I already clicked the button, it takes me to another page here to fill the form. Now, cost of product is 300. Deposit, at least EasyBuy allows you to drop 15% of the total amount of product you might have selected. So you must drop at least 15%. So 15% of 300 is 45. Let me say I drop 40. I want to see if it's going to flag error or not. You can see it flags 0 because it didn't bring out my details here, how I'll be paying and when to pay. Now, because 40 is not 15% of 300, so let me put 45. Then terms here is I'll be paying back within 3 months. Then delivery date is the day I'll be receiving my package, and I have arrangement fee which is 20 and bank charges is 20. Now click submit. You can see it brings out my payment details fully. Here I have date to pay back, payment amounts, total loan amount paid, and balance. These are the days I'll be paying back, and these are the amount I'll be paying back within the 3 months, and total loan amount paid. These are the amount that I already paid, which I must have paid. Then the balance. So I'm gonna click continue. Now here I'm going to add my email, and I must make sure that the email I'm adding is the same that I used to register on EasyBuy Bank. So I have to drop my email here, because if I drop a wrong email, it's gonna flag me error. And the amount of price, the amount of money I'll be dropping, 85, which is 45, which is 15%. Now, bank authentication from EasyBuy using Paystack. Now, payment successfully. Now you will notice that my item is still remains pending in my cart. Why? Because after checking out, EasyBuy would have to confirm and verify my details for about like 24 hours before I can receive my package. So for now, my package is still gonna remain pending, waiting for EasyBuy to confirm and verify my details. So that is all about EasyBuy e-commerce app. Thank you.
Hello, my name is Anna Makoto, and I'm presenting today our solution for the FinTech Nation Hackathon. So together with a team of developers and designers, we prepare the solution for open banking track, and we call it KYC docs sharing, know your customer docs sharing, and we worked on that solution together with team of developers, Anton, Dmitro, and Daniel, and with me as a product manager, and with Sergey, he is our designer. So we started to work on the problem hypothesis, and we were searching for different problems online, and then we came up with the idea that it could be some problem related to know your customer procedure. So we asked our lawyers we have known, and financial advisors to verify this hypothesis, and we decided that we can formulate this hypothesis as the problem with wasting money, because many banks, they simultaneously can spend a lot of money on the KYC procedure on the same person, and it is right. We can say that it is wasting money because that's time bank can just share these KYC docs between themselves and don't waste money. And also we have this problem regarding very bad customer experience when customers have to run different or probably the same KYC procedure for several times for different banks. So this is our problem we're trying to solve. And regarding the solution, we were researching that there are a couple solutions on the market, and the most related to our problem is KYC registry built by Swift, and almost around 15 banks using this solution. So they have to contribute the KYC docs to this registry, and another bank can use their registry to find this person. But the problem is only Swift can monetize this solution, and it is probably obvious, but still we came up with the idea when any bank can try this our solution and monetize it by itself. So what is our solution about? First, we make the uploading docs very simple, and users need to do it just once to upload docs, and then one bank can verify it and another bank can use it without any delay. And then next part of our solution, so we created the services for customers, and also the second part of the solution, we created the platform for banks to exchange KYC documents of the customers, but of course with the permission that customers have to give to these banks. Yeah, and we also were thinking regarding monetization. So monetization looks like that. We have a big bank just run KYC procedure for the customer and spend some money on that process. And then we have tiny bank. Tiny bank doesn't want to spend much money on the person, on the customers, especially when some bank has already spent some money on a KYC procedure. So why should this bank do it the same process again? So tiny bank asks a customer for a permission to use his KYC documents that already verified by big bank, and also tiny bank pays fee for know your customer docs sharing services, and another bank will do the same, will pay the same fee if he wants to use these customers' verified KYC documents. Yeah, this is regarding monetization. And regarding future development, we thought that definitely we have to work on the security of exchange docs process, because it is very sensitive information. And also we have to consider an option to build the solution on blockchain. It is a possibility to make it more transparent. So let's go to the solution itself and we'll see how does it work. So here we have this mobile version for customers. Customers can log in to this service and add any documents he would like to verify. It could be very typical documents for KYC procedure, and passport, license, utility bill, and so on. Then he can send these documents for verification. In permission, we have this button to send your documents to Big Bank, and you just do it. Then we go to notification and we can see that our documents sent to this Big Bank. Here this is desktop version for different banks, and banks also have to log in here. And this is a Big Bank desktop version. And let's look at the pending. Yes, we can see that Bobby Fisherman just asked us to verify his documents. Yeah, and we can approve it. Great. So when we come back to this customer's application, then we can see that we have this notification. Then this Big Bank just has approved our documentation, so it's okay for us. As well, we have this desktop version for another bank. We call it Tiny Bank, and we can see that Tiny Bank has an option to ask verification, KYC verification, or to ask to take the document that has been already approved by Big Bank, Bobby Fisherman documents. And this Tiny Bank has this platform, and you can see that Bobby Fisherman has his verification in Green Bank, so we can just check it. And in our system, as a Tiny Bank system, we don't have verification for Bobby Fisherman, but we can request it. So let's do it. Let's request it. Here is a very interesting moment. So to request these KYC documents, we have to ask permission, and to do it in Bob, to ask Bob actually to take his documents from Big Bank, but also we have to pay this fee for service, for docs sharing service. So as well, we can see that we our total paid, that we paid all this money for KYC documents sharing. So actually we paid it for the services that other bank provided for us. When we came back to this customer screen, we can see here another notification that Tiny Banks requested us to allow to use our documents and to take that documents in Big Bank. We just allow it, and that's it. Permission granted. And then we can go to this payments, and we can see how many money this month this bank, actually Big Bank, has earned. And we can see also that Tiny Bank has paid for Bobby Fisherman's docs transaction. So we can send it. Yeah, so actually that's it. This is our solution for KYC docs sharing, and that solution consists of two parts. First part of the services dedicated for users and for the customers of different banks, and the second part is for banks, and it parts allow different banks to exchange KYC documents, and also it allows different banks to run KYC procedure and earn money on that, not just to spend them. That's it. Thank you.
CO2 Farmers Market is a crowdfunding platform to kickstart green entrepreneurship. We help entrepreneurs fundraise their green businesses using CO2 credits. Our CO2 credits are built on a distributed ledger, which ensures they cannot be double counted, and those buying CO2 Farmers Market credits can know that they're supporting green startups. Using CO2 Farmers Market, anyone can purchase CO2 credits that are supporting innovative green businesses that are working on ways to reduce CO2 created from the things that we already do. On CO2's Farmers Market, you can also purchase carbon credits that support conservation efforts and projects that are working to remove CO2 that's already in the atmosphere. Like Kickstarter, Indiegogo, or WeFunder, CO2 Farmers Market is a crowdfunding platform. The difference is that people that support these crowdfunded projects receive CO2 credits in exchange for the carbon dioxide that the projects will reduce or remove. We're working with Hedera Hashgraph to use the core carbon principles for tokenization. The core carbon principles were put together by the Task Force for Voluntary Carbon Markets. These standards will help us mint tokens on the Hedera Hashgraph that meet standards that businesses are looking for. We've begun mapping out our token framework. Every project that raises funding on CO2's Farmers Market will have to finish a life cycle report and will have to use the core carbon principles template for their project. Working with Hedera Hashgraph and the Interwork Alliance for creating standardization for tokenization of carbon credits, projects fundraising on CO2's Farmers Market will be pilots in bringing this new standards to the marketplace. Thank you for your time. Please check out our pitch deck to learn how CO2 Farmers Market is bringing more inclusion to the carbon credit marketplace and bringing more impact to carbon credits.
Nowadays, cryptocurrencies have many robust wallets in the ecosystem, and it also have scalable blockchain solutions as a landing ground that potentially allow faster and more secure peer-to-peer transactions. Cryptocurrencies adoption rates have grown enormously in the past decade, but there's still so much we have to do to widespread the potential that it has. Bitcoin and other cryptocurrencies are not explicitly payment technologies, but fostering the widespread of them by merchants and e-commerce stores may serve to supplement the growth well. Our goal is to make cryptocurrencies more easy to be used by merchants, users, and peers through a shopping assistant in Telegram. But increasing crypto payments adoption, the process to buy, sell, and store crypto assets need to be redesigned and make it much more user and shopping friendly. The main benefits of crypto payments are lower transaction fees, access for everyone, immediate settlement, borderless payments, and a decade of maturity. No wonder Bitcoin and other cryptocurrencies are now being embraced by retailers, merchants, and consumers alike. This is why we built the MoneyBot, a shopping assistant in Telegram to make cryptocurrencies more easy to be used by users, merchants, and peers. Let's see how it works. We train our virtual assistant to help users with their daily tasks and transactions, such as spending cryptocurrencies. Here, we allow users, merchants, and peers to make transactions in exchange for products and services. Also, we train our natural language processing model on tasks such as finding ATMs to buy and sell cryptos, track coin prices of the day, and how to get started accepting Bitcoin as users and merchants. Help us accelerate the mass adoption of cryptocurrencies around the world using our market bot and shopping assistant in Telegram.